Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Markets flash a growth warning. Bond curves flatten from the US to Australia as markets increasingly factor in policy normalization. We get the ECB decision today. Splitting up Shell. Activist investor Dan Loeb thinks the company should break off its LNG, renewables and marketing businesses. We're going to break down results from big oil this hour. Supply chain pain. VW cuts its full-year forecast for car deliveries. More from our interview with the CEO, Herbert Diess, this hour.
Now, Tom, let's also take a look at futures. A little bit of pressure. Not only do we have about 25 companies reporting earnings globally, we had some in Asia, we're getting some in Europe, and then we have a couple of big ones in the US. But the focus, if you look at the markets, is firmly on inflation and the fact actually that the recovery could take a sideways slant because of this inflationary pressure that could force premature monetary policy adjustments, Tom.
Yeah, that yield curve flattening that we saw not just in Australia, but over in the US as well, very pronounced. The most flattening that we've seen since around 2020. In terms of how this is all playing out then in the markets today, just the first few seconds of the open, of course, here in the UK, still digesting that more generous budget than expected from the Chancellor Rishi Sunak, 70 to 75 billion or so additional spending. The FTSE 100, though, is down 0.2%, again, as those inflationary concerns are digested. But also, you have to bear in mind that iron ore and oil are off today as well. So that is a factor, specifically for the UK market. The Spanish IBEX is lower by 0.3%. The CAC 40 is flat. Digesting all of these earnings as well. In the US, we're looking ahead to Apple and Amazon later today. You had some very strong earnings from the likes of Ford. Slightly different picture for VW. A divergence when it comes to the automakers in Europe versus the US as they struggle with these supply chains. The FTSE, by the way, over in Italy, just about edging up by 13 points. Let's move it on to look at the cross assets then. We want to talk about the UK gilts. The fact that the government has come out and suggested or said, in fact, that supply is going to be reduced. So you saw a sharp leg lower in terms of gilt yields yesterday on the back of that news. Demand then for the UK 10-year currently yields at just below 1%. The 5s and 30s, we're talking about this narrowing of the spread then, 76 basis points. Again, we haven't seen that since around the middle of 2020. Sterling is at 137, just marginally stronger today. And Brent, again in focus, a drop of more than 1% in the oil complex. Let's see if there's any kind of response from OPEC+. We have seen, of course, a trajectory higher. Year to date, up 60% for oil, but it is lower in the last two sessions. That is the state of play 2 minutes or so into the European session here, Fran.
Yeah, Tom, if we dig a little deeper into the sectors. Now, remember, this is all about the flattening yield curve. This is because of renewed concern about the recovery and inflationary pressures. We also had some CPI out of Spain, a little bit more elevated than expected. I love looking at these sector by sector move because it just gives you the first flavor as a market open of where you could find value for investors. We're seeing pressure on some of the utilities. We're seeing pressure also on some of the healthcare. Again, healthcare, one of the things that we need to keep an eye on just because of pricing. Media media actually leading gains. Media getting some 0.9% overall from some of the sector. Tech also up 0.3%. Remember, we're expecting two big companies reporting later on in the U.S. in the tech space. And then travel and telecoms really lagging, down some 0.5%. So this gives us a little bit of snapshot, Tom, of the earnings outlook and also what investors are doing right at the start of trading.
And we're zeroing in now on three individual companies in three different sectors that we thought are worth highlighting for you. So Royal Dutch Shell, a number of interesting components to this story. The earnings, quite a significant miss. You're seeing that reflected, down 1.3%. But then Dan Loeb taking the $750 million stake, pressuring the company to spin off LNG, marketing, that part of the business, renewables, from its legacy business as well. So that story will unfold. We'll continue to watch it for you. UniCredit coming in with a beat. You're seeing gains of 1.6%. So fees better for this Italian business, banking business. They're going to continue, it seems, to push for growth through mergers, despite that fallout and the collapse of talks around Monte dei Paschi. That is a one bank to watch over in Italy. Airbus gains as well. They are increasing their outlook in terms of revenue and cash flow. They're confident on the return to the skies of travelers, business travel as well. They are sticking to their target of 600 jet deliveries, but it's a different picture versus Boeing. More positive for Airbus. Boeing, of course, struggling still with the fallout of the MAX. Airbus gaining close to 3%. Okay, and in the next hour, Francine will be speaking to Airbus's CEO, Guillaume Faury. Don't miss that conversation after 9 a.m. UK time.
Now let's also get to the Bloomberg Business Flash with Laura Wright. Hi, Laura.
Good morning, Francine. Lloyds has posted a better than expected pre-tax profit in the third quarter and lifted its outlook as it benefits from the rebounding UK economy. Profit at Britain's biggest mortgage lender almost doubled to £2 billion, ahead of analyst expectations for £1.4 billion. Ford shares jumped in extended trading after it raised its full-year profit forecast and restored its dividend. The automaker's results topped estimates on strong sales and better chip supply, but it says the semiconductor shortage could still extend into 2023. Meanwhile, GM also gave a warning about the chip crunch. It says the shortage could last until next year, implying weaker results in the fourth quarter. Samsung's third quarter profit has exceeded analyst estimates after a prolonged semiconductor shortage boosted prices of memory and system chips. Net income rose to $10.3 billion in the 3 months ending September. The world's biggest maker of memory chips and smartphones has seen strong demand and higher prices as the global economy recovers from the COVID-19 pandemic. That's the Bloomberg Business Flash. Tom, Francine.
Laura, thanks so much. Laura Wright in London. Now, joining us to talk about the markets is our markets reporter, Justina Lee. Justina, we have like 1,000,001 earnings. First of all, thank you so much for joining us. And we also have a flattening yield curve, which is getting quite aggressive in repricing some of the inflation expectations. Do we trust the bond market to tell us what central banks will do?
I think this is a really interesting example of how sometimes markets can be quite baffling, because earlier, of course, when we first started talking about Fed tightening, we were seeing a steepening yield curve, but now we're seeing long end rates really plunging. And that's really a sign that people are shifting the focus on what is going to be the impact of all these paired accommodation. Because obviously yesterday we had a big rate hike move coming out of Brazil. People are talking about Bank of Canada also accelerating rate hikes. Of course, we've got ECB today. And it seems like it's a sign that traders are getting worried that we're going to see an impact on economic growth, especially with the impact from all those supply chain bottlenecks as well.
Yeah, inflation, you talked about that. Of course, that is a consideration central to what's happening regarding the ECB in that debate there. We have a line dropping now. Spanish October EU harmonized CPI, consumer price index, rising to 5.5% year on year. The estimate was for 4.6%. So 5.5% versus the estimates of 4.6%. Of course, Europe has been less impacted by some of these inflationary pressures, but this clearly points to the fact that they are far from immune, and this will be central to that conversation with Christine Lagarde, the ECB. How do things stand? What stands out for you in terms of the earnings picture? There's so many corporates coming through. We're getting a clearer picture of supply chains. What for you is kind of a standout point at this stage?
Yeah, I mean, so far it seems like the market has digested the earnings season pretty well. We've still got global stocks at a record. Of course, today we have like Lloyds, UniCredit, and AB InBev beating earnings out of Europe. And I think one thing people have really been looking at is how companies are able to defend their margins in the face of rising costs. And that's why it's pretty telling yesterday that both McDonald's and Coca-Cola kind of beat their earnings. And it's a sign that at least these American classics have been able to raise costs without kind of scaring consumers away. But I think that really is going to be a focus of this earnings season.
Justine, also when you look at Bitcoin, I mean, we thought it was kind of on a tear thanks to that Bitcoin ETF, but it's pausing for breath.
Right. I mean, it seems like the sell the news effect is finally coming in. I mean, we have Bitcoin trading a bit below $60,000 a day. Seems like the euphoria from the first US Bitcoin ETF is finally fading. But I think, like, interestingly, you know, what a lot of people are looking at in the crypto space right now, of course, is the Shiba Inu coin. I mean, it's kind of funny to go from, like, earnings season to, like, you know, a new, like a dog.
What is
like,
it with dog
coin.
theme? What is it with dog themed cryptocurrencies?
They're cute. It's a joke and a joke and a joke, but
Yeah.
actually the valuation is
Exactly.
insane.
I mean, it's a new spin on the original Dogecoin. But yes, I mean, that's been like rallying really hard lately because people are kind of angling for it to kind of get on Robinhood. And it seems like, who
There's
knows,
there's a
maybe-
lobbying campaign, isn't there? to get onto
Yes.
Robinhood?
Yeah, I bet you it has a bigger valuation than some of the earnings. I'm going to dig into that and find you some fun
let's get some,
and maybe
let's get some
depressing
clarity on
facts.
that. Yeah, for sure. You talked about McDonald's. They've raised their menu prices by 6%. I don't put you down as a purveyor of Mackie D's, Francine, but for some out there, this will be sad news. 6% increase in the Mackie's D's menu. Anyway.
I mean, I don't say no to junk food, is all I would say.
There we actually, on occasion, Francine will dabble in junk food. Justine Ali, our reporter covering all things earnings, of course, and that yield curve flattening. Thank you very much indeed. Coming up, Shell's big miss. The oil super major reports adjusted profit for the third quarter. Missing estimates. That's a day after activist hedge funds, of course, Dan Loeb, goes on the attack. More on that story. We'll get the details. That is up next. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case, I mean, at least in theory.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 12 minutes into the European trading day, we had that Spanish inflation figure a little bit above expectations. It's not doing much, as Tom was saying, for euro. If you look at some of the European stocks, look, they're a little bit on the downside. Of course, there's concern that the recovery from the pandemic will slow as elevated inflation could force monetary policy to change quite quickly. Now, joining us from Frankfurt, our reporter Maria Tadeo, where we're expecting news from the ECB. Again, once again, the focus will be firmly on inflation. Maria, hotter than expected inflation out of Spain. What does this all mean for the ECB?
Yes, Francine, we had new data from Spain today. The INE putting out their new inflation numbers, 5.5 increase from a year-on-year basis in the Spanish inflation. This is the highest print, Francine, since 1992. That was a year when Spain was holding the Olympic Games. That gives you an idea, a 29-year high. It's also, when you look at the core inflation print, it's 1.4%, which is already an increase over the past 8 months that we've been seeing also in the core print. Again, this will feed, and this is a very important number today, in fact, because we know that at the European Central Bank, the Governing Council today will focus almost exclusively on inflation. And there is now a heated debate about whether or not this inflation that we're seeing is a one-off or it's actually sticking, will have big economic repercussions. Now, until now, the Doves have won the argument that it is a one-off, that it is heating up, but will cool down. Having said that, today we're expecting more divisions to come in, and the data, of course, is making this narrative that it's just a one-off harder and harder to justify for Christine Lagarde.
Yeah, so pressure on the Doves as the Hawks maybe start to feel that their wind is at their backs with this kind of data. Maria today is going to be following all the news, of course, from the ECB for us on the ground there. Thank you very much indeed. Okay, joining us now is Peter Fitzgerald, CIO for Multi-Assets and Macro at Aviva Investors. Peter, thank you for joining us this morning. The market's pricing in a rate hike as soon as the end of the year by the ECB, and the market's getting this one wrong.
So I think we're less concerned about inflationary pressures and potential interest rate rises in Europe than we are in emerging markets and the UK and the US, for example. Our expectations is the ECB will probably push back pretty hard against any expected interest rate rises over the next 12 months or so. But let's sort of take a step back for a moment and look at the bigger picture here. I mean, globally, particularly within developed markets, central banks are still running emergency monetary policies. And let's face it, we're no longer in an emergency. So the expectation that everybody should have is that over the next 9, 12, 18 months, that interest rates will move higher.
But Peter, interest rates can move higher, but when do they move higher? And actually, if you have a repricing, and it could be from the Fed, it could be from emerging markets, of yields and the curve across the world, what does it mean for equities?
Well, to some extent, you're seeing that repricing, and you had some pretty large moves yesterday. I mean, if you just look at what happened, for example, in short-term interest rates in Canada, you had 60 basis point movements. Sort of intraday, they finished around 40 basis points. This is a market move sort of normally 2 to 3 basis points. So I think you're seeing some of that pushback against the view that interest rates are not going to rise in the next, let's say, 6 months. If anything, we would say the risks to that are skewed, that they do move earlier than people expected. But I keep going back to my point. Central banks are running emergency interest rate policies that were put in place during a pandemic that we didn't know how that was going to pan out. We're no longer, well, I mean, we are officially in a pandemic, but we're certainly coming out the other side of that. We're not in the same level of emergency that we were when those interest rates were cut to those levels. So again, I don't think anyone should be surprised if interest rates start to move a little bit further and a little bit faster than people expect. So I would personally not be surprised if you started to see some of the major central banks, ex-ECB, start to move on their interest rates in the first half of next year. And this is the challenge with the bond markets, and you're seeing it in terms of curves flattening, and particularly if you look out into forward space, curves are actually inverting. To come on to your other point, what does it mean for equities? It will be more challenging for many equity markets.
In terms of earnings, Peter, you're looking at the banking sector. We have a lot of people coming on saying, look, banks are an area where you want to be exposed to, given this high yield environment. Gradually, of course, higher yields, net interest margins looking more favorable. We're still in an environment of growth, even if there are question marks around that. You want to have exposure to banks. You don't agree with that view. What are you seeing in the banking sector that makes you cautious?
So from our perspective, I get that. I agree. Banks' earnings will improve as interest rate margins improve and as yield curves potentially steepen. I suppose our challenge, and particularly when we look at the European banking market, is that these are businesses that are structurally challenged from technology companies to some extent, from incumbents that are moving their businesses online. You have significant cost bases in terms of their real estate and branch networks. So this is an area that, yes, you've got what I call some of those macro factors that are supportive. And yes, there will be a duration play to be made within banks. But our view is that there are some material challenges to that sector also.
Peter, overall, when you look at the earnings season, it's all about margins. Is it going to be even more about margins in the next quarter? And how do you pick the winners?
So I think it's margins, and linked into margins, it's some of the topics, of course, that everyone's been talking about in terms of the supply chain bottlenecks and challenges. And while one can never be completely complacent on these things, what I would say is that you have a confluence of factors that are impacting this. And we've had effectively the world economy put on pause, put on life support. You start to open up again. You haven't yet had the ability for people to spend on services to the extent that you would normally expect at this point in the cycle. And therefore, that spending is going into goods rather than into services. And that's happened at a moment, again, as I say, as factories are reopening, but it's happening in a world where China is running a zero COVID policy. And my expectation is, I don't think zero COVID policies are sustainable in any part of the world. We've seen that change within Australia and New Zealand. And I think as you see people move to learning how to live with COVID rather than a view that it can be suppressed, I genuinely think a number of those supply constraints will be addressed as we move into next year. So where that leaves you on margins is the ability for businesses to pass on some of those expenses and costs. I think they will do, but I'm not overly concerned on I'm not looking at a sort of 3-month view. I'm looking more at a 6, 9, and 12-month view. I think a lot of those issues will be resolved.
Pete Fitzgerald from Aviva Investors stays with us. A line breaking, and this ties into the top of our conversation there with Peter. Traders now pricing in an ECB rate hike of 20 basis points in December of 2022. Peter saying that we should expect Christine Lagarde to push back on that view by the markets. Again, traders pricing in a 20 basis point hike by the ECB in December of 2022. Plenty more coming up. This is Bloomberg.
television and radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Welcome back to The Open, everyone. We're about 23 minutes into the European trading day. A lot of the focus, of course, is on inflation, and it's ECB day, so happy ECB Thursday day. Now, the picture overall is that, of course, there's a repricing in the markets. They're now expecting a move from the ECB in terms of interest rate hikes for December 22. But when you look at yields, it's very clear that the risky bond market appear impervious to wagers calling for higher rates. Maybe the ECB is a little bit different to the rest of the G7 central banks. So we're back with Peter Fitzgerald, Chief Investment Officer for Multi-Asset and Macro at Aviva Investors. Peter, thank you so much for staying with us. Is there anything in the European bond space that you like right now because of the differential between Bank of England, ECB, BOJ, and Fed?
I think the European bond market is a really difficult one to get too excited about, with yields where they are, and again with an expectation that the ECB will again push back on those interest rate rises. I mean, let's face it. We're in. I had to do a double take briefly because we're in sort of October, heading into November 2021, and when I heard 20 basis point rate hikes for December, I sort of had to quickly check my screen because you're right. It's like December 22, not December 21 that we're talking about. So it's difficult to get excited when you're talking about a potential 20 basis point hike at the end of next year. I think the areas where you have greater opportunity for moves on bond markets is obviously in emerging markets that we're seeing, but also in the UK and in the US.
Peter, would that take you into high yield credit though over in Asia, areas like China?
I'm not in high yield. We have very little exposures globally to high yield. The challenge that you have within the Asian high yield market is the indices are particularly skewed to Chinese developers and Chinese property companies. And that leads you into a whole other series of risks, which you can't just get a feel for by looking at the headline yields that are available, because you have that confluence of politics with economics. So globally, and particularly for Asia, we have almost no exposure to high yield at the current levels. Obviously, there are some portfolios and there are some clients that are restricted in terms of what they can do with their mandates, and therefore they find themselves obliged to seek yield in high yield credit. For portfolios where you have flexibility, we would say you can get a higher yield in some of the equity markets, or you can get a higher yield by simply shorting volatility, which is highly correlated to credit anyway.
All right, Peter, thank you so much. Peter Fitzgerald. I was going to ask you about volatility in Bitcoin and cryptocurrency, so we'll have to get you back on to talk about that. Chief Investment Officer there for Multi-Assets and Macro at Aviva Investors. Now, coming up, more coverage, of course, of the ECB. Traders pricing a rate hike of 20 basis points in December 2022. I mean, it feels like such a long time away, right? What can happen in 14 months? It's very clear that the ECB is probably not coming under pressure as other central banks to tilt to a more hawkish stance.
Yeah, still a ways away, but certainly we do expect Christine Lagarde to push back even on that view of December 2022, because they don't want to be in a position where they're looking at higher rates, even within that time frame. So we'll see how that conversation unfolds later today. Plenty more ahead. This is Bloomberg.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент. Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, ну, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Тоже это не просто, в чем дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее. Но это опыт, это первый раз. Ну, то есть второй будет проще.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are our top stories today. Bond curves flatten from the U.S. to Australia as markets increasingly factor in policy normalization. We get the ECB decision today as Spanish inflation hits a 29-year high. Splitting up Shell, activist investor Dan Loeb thinks the company should break off its LNG, renewables and marketing businesses. We'll break down results from big oil. And supply chain pain, VW cuts its full-year forecast for car deliveries. More from our interview with the chief executive, Herbert Diess, this hour. Tom, if you look at the markets, so they're worrying about inflation, so this repricing and this flattening of the yield curve impacting all asset classes.
Yeah, the flattening of the yield curve to the extent that we haven't seen since 2020. So concerns certainly being flagged by the bond markets that inflation is becoming more entrenched. The equity markets, though, taking a slightly different view, of course, weighing up the earnings picture. And it's been mixed this morning, quite frankly. The likes of VW coming out with some disappointing numbers, but Airbus coming in much stronger in terms of its guidance. And you're seeing that reflected in the CAC 40 over in France, gaining 0.3%. Across the benchmark, though, you're flat. We're looking ahead to the ECB and Christine Lagarde. To what extent is she going to push back on this view that you're looking at a rate hike from the ECB as soon as December of 2022? As soon. That time frame, of course, within context. We'll see if she pushes back on that. Here is how it's playing out in the bond space. This, of course, is on focus in terms of what's happening. The passover from Australia, from the US, that yield curve flattening, the demand for the longer part of the curve, not just in the US and Australia, but in the UK as well. The 10-year German Bund currently at 15, minus 15 basis points. France, you're seeing 19 basis points, closing into 20 basis points. And over in Italy, almost a 1 basis point on the 10-year. Again, the demand for the longer end is the shorter term where you're seeing the sell-off on the back of these rate hike expectations, and that is flattening the yield curve. Let's take a look at how the sectors are playing out then. And that shift to technology, is this suggesting that the reopening trade is starting to lose some of its legs? We should also take into account that iron ore has fallen quite significantly today. Brent is also under pressure. Food and beverage at the top of the list, gaining almost 1%, followed by technology, getting 0.9%. And you saw that divergence in the States between small caps that fell and tech that sustained. Again, the reopening trade and whether that is being questioned now by the markets. Travel and leisure down by 1.3%, followed by energy. Again, as a result of these input prices starting to come off. Energy down 1%. Francine.
Yeah, Tom, ECB officials, of course, led by President Christine Lagarde, gather in Frankfurt for their latest monetary policy decision. Now, in the past few minutes, we have learned that traders are pricing in an ECB rate hike of 20 basis points in December 2022. Overall, there's a repricing of yields across the curve. The Bank of Canada, the latest major developed central bank to signal its intention to tighten policy. And then in the markets, also expecting borrowing costs to increase by 15 basis points here in the UK. So joining us from Frankfurt to talk about the ECB, our reporter Maria Tadeo. Maria, I know you have some great facts and figures about hotter inflation than expected out of Spain and what that means for the ECB.
Yes, Francine, and I really do wonder if that repricing that we've seen in the past 20 minutes really comes down to that inflation print from Spain. We did see that prices in October on a year-on-year basis jumped 5.5%. That is almost a 29-year high. It's 1982. It's the year of the Barcelona Olympics. When you look at the core inflation, it's also up to 1.4%. This is the fourth consecutive month in which the core inflation, you strip away the energy element, is also jumping in the country. I do want to say for context, when you look at the Spanish economy, this is still a very much led by services economy, and also energy bills are going through the roof in the country because of the energy crisis. So a lot of this really does have a utilities energy bill component to it. Nonetheless, numbers are showing that it is picking up and that there is price pressure that is sticking. And, you know, Francine, that will be the debate today here at the Governing Council. It really is about inflation and that debate as to whether or not this is just temporary, it's getting hot, but will cool down, or it's actually becoming something much more structural for the European economy.
Maria, we're going to get the PEPP, of course, our emergency bond buying program, coming to an end March of next year. Are we going to get any sense, any details as to how they're going to replace that, if at all, what the changes might be?
Yes, and you know, Tom, it's funny that the conversation this week, at the start of the week, it was very much about whether or not the ECB would hint to the end of the PEP program, how it would transition to the APP, perhaps a new and improved, more flexible version. But that has completely now almost disappeared from the debate, and it really is about inflation. And that's exactly what sources told us yesterday, that the ECB is not really going to debate how that transition phase will go about, that this will be a meeting that will focus exclusively on inflation and whether or not the ECB will still want to continue that narrative that this is a one-off but will cool down, and ultimately that is where the curve is going. Or we're actually going to see pushback now from the hawks saying, if you look at the data over the past 3 months, it does show that this is not just a blip, and it's becoming temporary in nature. It's being extended in time.
Yeah, Maria, thank you so much. Our Maria today, they're in Frankfurt. Of course, Maria will be in Frankfurt throughout the day. Stay tuned for Christine Lagarde's press conference at 1:30 p.m. London time. And Tom, it's extremely difficult to navigate because if you, of course, increase someone's wages, you know, because you can't find the right person, then it's very difficult to take that down. So that, of course, is inflation that's here to stay. But if you're paying more for your chips and suddenly there's a flood of chips in 6 months, and, you know, that takes inflation away.
Yeah, and we've been hearing from officials within Europe, within the ECB, saying that one central area, as you say, to look at is that wage inflation, whether that becomes sticky. We haven't seen the data to support that yet. So maybe that will be something that Christine Lagarde flags later today.
Yep. Coming up, our conversation also about supply chains with the Wolfgang Chief Executive, Herbert Diess. We'll talk earnings, supply chains, and, of course, electric vehicles. This is Bloomberg. The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look great.
the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open. 40 minutes almost into the European trading day. You're flat across the Europe Stocks 600. Divergence, though, in terms of the indexes. This is because of what you're seeing in terms of some of the energy prices. The FTSE 100 is down 0.3%. Earnings, of course, a major factor as well. The CAC 40 gaining 0.3%. Look to Airbus for the reasons behind that strength in the CAC 40. Top of the list in terms of technology, in terms of sectors, is technology gaining about 1%. Bottom of the list is energy, down by 1.2%. And talking of energy, Shell reporting a big miss for the third quarter. Adjusted profit for the Anglo-Dutch oil company coming in at $4.13 billion. That's way below the average estimate of $5.4 billion. The miss came only a day after activist hedge fund Dan Loeb, of course, he went on the attack on this company. He wants to see it split up. For more on this, we are joined by Bloomberg's executive editor for energy and commodities, Will Kennedy. Will, a busy day. Thank you for joining us on set to break this down. Let's start with the Shell earnings then, and this move by Dan Loeb. What kind of stood out from you as to where things stand with this company?
Well, I'm looking forward to hearing from Ben van Beurden, the CEO, when he speaks to the media in about 20 minutes and has to mount his defense against Loeb's plan. What Loeb wants to happen is to split Shell into at least two parts. One would be the legacy oil assets, which he just wants to sweat for as much cash as possible and give it back to shareholders. And then there would be a sort of more ESG-friendly company consisting of Shell's gas business, its forays into renewables and new energies, and its retail business. I suspect what Van Beurden is going to say is that to realize his plans to transform Shell and make it fit for a low-carbon world, he needs the cash flows of today to pay for the business of tomorrow. I suspect that's where the argument's going to lie. But, I mean, it's a real bombshell for the management team to have an activist like this come into a company the size of Shell. We've already seen Engine One, this very small activist in the US, changed Exxon's strategy, and now you've got Dan Loeb in Shell. And if you'd said a few years ago this gigantic global industry was going to come under sustained attack from activists, people would have been surprised. It's quite something.
I was going to ask you, if you were an activist investor, though, this would probably be the sector that you'd want to be involved with.
Yes, absolutely. I mean, it's a sector in a huge flux with huge questions about what the right strategy is during the energy transition. You've got, on the one hand, you've got investors who say, oil has access to enormous cash flows, prices are rising, it's hugely cash generative, just give us back that money and we'll decide how to spend it. Don't make decisions about how to build energy transition businesses. On the other hand, you've got an increasing cohort of investors, especially in Europe, who won't invest in oil and gas, and they're asking for emissions reductions, they're asking for new energy businesses. And so I think there's a sense which Loeb is trying to exploit, that these companies can't serve two masters. So he's saying split into two, one for this master and one for this.
How much weight should we put on this comment by Shell, this commitment around emission reductions? 50%, I think it is by 2030.
I think it's part of the picture, and that's being driven partly by the conversation we're having now and the pressure to be more ESG friendly. It's a very big commitment because in the past their carbon targets are related to energy intensity, i.e. how much emissions you produce for each unit of energy. This is an absolute commitment to halve Scope 1 and 2, so that's emissions not from what's in people's petrol tanks or in aeroplanes, but from Shell's refineries, Shell's trucks by 2030. But the other thing in the background here is this court case in Holland that Shell lost earlier this year, where the judge said that emissions breached the human rights of Dutch citizens, and they're trying to make themselves partially compliant with a part of that judgment they agree with. They're going to appeal some of the judgment.
Thank you so much, our Will Kennedy there, our executive editor for energy and commodities, joining us on Shell today. Now, remember, you can also follow Will and his team's latest updates on Shell's numbers. That's TLIV Go. It's going to be pretty interesting. So I would do that now if you're a Bloomberg terminal user. Now, VW sticking to its margin forecast, even as chip supply strains take a toll on third quarter production and profits. Europe's biggest car maker has cut its forecast for annual deliveries and sees sales in line with what they had a year ago. Well, our colleague Matt Miller spoke to the VW chief executive Herbert Diess this morning.
Q3 really was difficult for us. It drove our volume brands into the red numbers. Premium remained quite resilient. Now Porsche, Audi doing quite well, but the volume brands really suffered a lot. We're also prioritizing semiconductors towards higher margins. So all in all, I think we are happy with the results. And I'm sure that we have seen the worst. So Q4 should be much better now. We should be through the worst, and then we should see an increase of semiconductor supply basically quarter after quarter. This is how we see the supply chain recovery. There will be remaining constraints for even for next year, but I hope that month over month we will show a better resilience of the supply chain. So we're working hard for that. We have big teams, direct contact with the semiconductor manufacturers, with the foundries, and so our teams are working really hard to get more, and we should see some innovation. But there are also some positives. Now we had very good, very strong EV sales. We could double EVs sales over last year. So also some positive signs from out of Q3.
Sure. You had talked about the possibility of making your own semiconductors. Is that still a topic of discussion at Volkswagen?
That for sure, but that takes time. Now we have to build up the resources as the semiconductor landscape in the car really is consolidating. Now we're coming to higher, more performance compute units in the car. It makes sense, it could make sense in one or the other area to do your own semiconductor design. We are working on that. This is our way forward, not for all the semiconductors. Semiconductor content in the cars is growing significantly, about 7 to 8% year after year. So there's a lot of silicon going into the car in the future. Some of it will be made by our own entities.
Are you seeing other supply chain issues? You know, beyond semiconductors, are you having trouble getting hold of any other components for cars, or are you seeing substantial price increases?
We see price increases in commodities, in precious metals, and steel. We even see some constraints in some of the areas, but so far this is manageable. Determining really or crucial is semiconductor supply, and will remain semiconductor supply.
Are you able to pass on those price increases? I know, dealers, certainly in the U.S., are charging far above MSRP when they can. Are you able, as a manufacturer, to start raising prices?
We see some movement in our used car business. Now used car prices are quite stable, even coming up as the demand is stronger than the supply. We also see some possibility to reduce our sales incentives, though this is a worldwide trend. And this also is, you can see in our numbers now, as we see sales numbers basically on the level of last year. We have a much higher revenue, so we can improve the quality of our sales, yes.
That was VW CEO Herbert Diess speaking to my colleague Matt Miller. And sticking with autos, Ford has seen its stock surge. After raising its full-year profit forecast, it's seeing a let-up in the shortage of semiconductors, a problem still haunting many automakers, including, of course, VW, as we heard there. It's also warning that supply issues could persist into 2023. Over at GM, CEO Mary Barra says we are through the worst of the supply chain crisis.
we've seen recovery from the impact in Q3 from some of our supply base that caused a little bit deeper impact. So I'm optimistic that we are through the worst of it. We've shared our safety protocols with our supply base around the world. So that's what gives me confidence that we're going to see a stronger Q4 and then a stronger Q1. And even as we get to the second half of next year, continued improvement.
All right, Greg Trudell, our cart czar, is the best person really to break all of this down. Craig, thank you for joining us on set. What do you take away from it seems like a divergent picture in terms of what we're seeing from VW. The volumes, obviously, the volume parts of that business impacted. They've focused on Porsche, on Audi, and then you've got Ford doing really well. It's a good turnaround story for Ford.
Yeah, it's a difficult thing to parse. There's a lot of nuance here where I think we're seeing across the industry, you know, the emphasis on what's most lucrative, right? For Ford, it's pickups. For GM, similar story. For VW, on the other hand, they're such a house of brands. There's so many mouths to feed, if you will. So with VW, it's really, you know, prioritizing Porsche and Audi. And, you know, the VW brand, on the other hand, sort of, you know, takes the brunt of this crisis. But what we're seeing is sort of remarkably consistent language. You heard, you know, Diess and Barra both speaking to the idea that, yes, this is going to be with us for some time, but, you know, they're optimistic about the idea that we may have seen the worst of it this past quarter.
How do you get to be a car czar? Do you have, is there like a certain quarter where you know, there are electric vehicle cars?
I just know I call my wife Czarina now, yeah.
Craig, when you look at some of the things, you know, Tesla is dominating the electric vehicle space in Europe. I mean, do they also have supply chain issues? Do they deal with it better, or is it just the desirability of the car?
They're definitely having issues. I think what you have is a situation where, you know, they already were in a situation where supply was extremely constrained. You know, they were struggling to meet demand, and they happened to go from one plant to two. And I think to their credit as well, they've also executed, as you alluded to, a little bit better than some of the established car makers where, you know, they've rewritten firmware to sort of, you know, make a certain supply of chips usable. And, you know, interestingly, Herbert Diess actually invited Musk to an executive meeting recently to sort of, you know, point to him as an example of how, you know, he and his managers need to better manage through this crisis going forward. You rarely see that, you know, one car maker inviting the CEO of a rival automaker to come in and sort of speak to the troops about, you know, how to act going forward.
Craig, what do these earnings tell us about who amongst the incumbents is getting and taking the lead when it comes to EVs and electrification?
Well, Tesla is still the dominant player, but VW, you did hear Diess speak with Matt Miller about the idea that they do expect to, you know, double battery electric vehicle sales, which is pretty impressive given the amount of sales that they were able to manage last year. You see a lot more models coming online. They're going to give Tesla a run for their money. I think with General Motors, you're seeing maybe a little bit less on the volume side, aside from China, where they have some lower priced models. In the US, they have some really exciting product on the way, but it's really higher price. You see, you know, the monster Hummer pickup that they're about to sell, the Cadillac SUV that they have coming. Those are interesting models and are definitely going to boost their sales of EVs, but they're still lower volume segments for them.
Craig, thanks so much, as always, for Smart Conversations. Our car czar, I love that title, Craig Trudell. Now, coming up, we continue our conversation on inflation and central banking. Spanish inflation hitting a 29-year high. What does that mean for Christine Lagarde over at the European Central Bank? We'll have full analysis next. This is Bloomberg.
Kong lost its top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 54 minutes into the European trading day this Thursday. The Stoxx Europe 600 is flat. You're seeing losses here in the UK down 0.2%. Gains in France, 0.3%. The Airbus bump. Okay, joining us now is Christine Aquino from our FX and rates team. We've got to talk to you about yields and the yield flattening of these curves, the demand for the long end, the sell-off at the short end. Is the bond market getting this right?
Well, Tom, I mean, they're just reacting to what we're seeing, right? Whether they're proven right is another story, and we'll probably not see that until much later when we get a fuller picture of growth and inflation in these major economies. But yes, you know, I think this flattening in yield curves globally does bring up these past worries about the yield curve that we've seen before, right? Of less optimism in the economy, worries about long-term growth, and what expectations for rate hikes are going to do longer term, even if shorter term, people are expecting them, because inflation is starting to look much more entrenched, less transitory, as central bankers claim, and markets are expecting policymakers to do something about that.
Christine, traders are now betting a 20 basis point ECB rate hike by December 2022. It feels like a far time away, but actually it's significant.
Absolutely, Francine, because as we know, the ECB is probably one of the more dovish central banks, at least as far as major developed central banks are concerned. You know, they're still very much emphasizing the prevailing bond purchase program. They're not really even talking about rate hikes. Just a few weeks ago, we've had a few ECB policymakers pushing back on even the little bit of rate hikes being priced into markets back then. Now that's ramping up because we've seen a trend happening across major central banks where markets are really piling on the pressure for central bankers to act. We've seen this in the UK, of course. We've seen this in New Zealand. More recently, we're seeing this in Canada, Australia, and now the ECB is getting dragged into the fray as well.
And Francine made the important point of focusing on what's happening around wages and labour within Europe. You're getting a line now. German unemployment falling by 39,000 in October, so significantly more than the estimates of 20,000, suggesting an improving jobs market in that country at least. Thank you very much indeed, Christine Aquino. Gives a throw forward to what's happening with the ECB, Christine Lagarde later in that decision from the European Central Bank. That is it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
Now is the wrong time to raise taxes on anybody, whether it's billionaires or average consumers.
Energy shortage. I would not say this is a crisis. I think this is certainly the momentary mismatch between energy supply and demand.
We've seen recovery from the impact in Q3 from some of our supply base that caused a little bit deeper impact. So I'm optimistic that we are through the worst of it.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Flattening the curve, long-dated U.S. yields slide as traders question how well the U.S. will handle higher rates. Today, the ECB is likely to reassure markets that price rises are transitory. Airbus ups its profit target for the year again. The jet maker sees a recovery in its air travel, supporting its push to boost output. We'll speak shortly with the chief executive, Guillaume Faury. And Shell misses third quarter estimates as activist investor Dan Loeb pushes to break up the company. It sets a more ambitious emissions reduction target, but leaves out Scope 3. Now, first of all, let's check on the markets. Quite a lot going on. First of all, we're hearing from, of course, Shell management shortly on a call to talk a little bit about Daniel Loeb and overall what the earnings outlook will be. European stocks actually pretty much steady. Again, U.S. futures also a little bit higher. Investors weighing some earnings report to assess the strength of the economic recovery. We're looking at Volkswagen. We had a fantastic interview that our Matt Miller did with Herbert Diess and then UniCredit. Of course, the main question there is what they do with Monte Paschi. Let's get straight to the map to have a look at exactly what's going on. Futures contract, for example, in the U.S., definitely looking at yields. I have to say the 10-year Treasury rate climbing 1 basis points with the 2-year yield adding 4 basis points. And all this policy uncertainty also weighing on some of the bonds in Europe. But equities will probably take their cues from what's happening in inflation. It is also ECB day, so we'll hear and wait from Christine Lagarde what she has to say a little bit later on. Now, we've got third quarter results from Airbus. The company has boosted its earnings and cash flow targets for the second time this year. Airbus is banking on a recovery in air travel to support its push to boost jetliner output. Well, I'm delighted now to be joined by the company's Chief Executive Officer, Guillaume Faury. Mr. Faury, thank you so much for joining us on Bloomberg today. Now, you boosted your earnings and cash flow targets for the second time this year, banking on a recovery in air travel. How worried are you about some of the fresh lockdowns in Asia?
Good morning, Francine, and happy to be with you. Indeed, we had our third quarter results earlier this morning, and we're happy to confirm the guidance on the number of planes, but raise the guidance on the EBIT and cash as well. It's against the backdrop of a slow recovery of air travel, coming back from very low levels mid of last year. And we continue to see an improvement. It's a slow improvement, but overall it's getting better. And this is giving us more confidence that things will be back to normal. We expect a full recovery between 2023 and 2025. So it's still going to be a long road.
Monsieur Faure, do you expect the recovery in air travel to be linear, though, up until 2022, 23, or will we see start and stops again?
The recovery has a very different shape, whether we're speaking about regional, national, travel, domestic travel, and long-distance international flights. Obviously, the situation on the closure of the borders and the different ways the pandemic is managed by different countries makes the recovery of the long travel flights slower than what we see on domestic flights. But basically, the stronger recovery on domestic flights is well supporting our ramp-up plans on the single-aisle family, which we have started to do in Q3 this year. On the wide bodies, it's going to come a bit later, and we have recently confirmed that we see some uptick on the wide bodies moving forward, but at a much slower rate than what we have on the single-aisle.
Monsieur Faure, how do you plan to handle some of the objections from lessors and engine makers to your ramp-up plans?
I'd like to say there's no objection when it comes to the short and mid-term. We have a fully aligned supply chain when it comes to 2022 and 2023, where there are discussions, and it's okay to have discussions. It's about the long-term rates of the single-aisle family, and in particular when we speak about rate 70 and rate 75. At Airbus, we clearly see the demand for this level of production, but we need to take into account the situation of the supply chain and the speed at which we can get there and the sustainability of those rates. That's what we are analyzing at the moment. But again, I'm very happy to confirm that the demand for our products, for single-aisle products, goes up to 70, 75, supports this level of production rates. So we keep working hard on those rates to see when and if and when we get there.
Monsieur Faure, so can you confirm that you think suppliers basically can handle the ramp-up this quickly, and how will Airbus support them?
That's an important question to us and to the sector. We are just going out of 15 months of very low rates. I call it hibernation, and we are now ramping up again against the backdrop of a very complex situation on international markets when it comes to logistics, to energy, also to hiring. And it's not surprising that there are difficulties at the beginning of this ramp-up. But overall, we want first to be back to where we were before COVID-19. On the single aisle, we were going to rate 64. We went down to rate 40 during these 15 months of the pandemic. And we are now going up, targeting a rate 65, so very close to 64, rate 65 by summer 2023. So that's the first step. And here it's about getting the system again back on track for the outer years and the rate 70, 75, and back to what we were just discussing before.
But Monsieur Faure, could you, for example, offer guarantees to some of the suppliers that Airbus will take the parts even if demand changes?
That's not the kind of problems we're in. The guarantees for taking part was probably at the time where the demand was going down, and this is the way we have helped we have helped suppliers in this very moment, still taking delivery of parts that were not really required given the much lower production rates. Here we are in a very different situation. It's about ramping up and ramping up as fast as possible. So we are taking parts because we need them to produce the planes. If it comes to going to rate 70, 75, will be the result of the work we are conducting right now. And these are decisions we will probably take in 2022. We'll see at this very moment how we deal with it. But we have normal contractual frames with suppliers that we will continue to apply moving forward for those rates. It's business as usual.
Monsieur Faure, are you confident of meeting the goal to deliver 600 planes this year?
We have confirmed the guidance of 600 planes. We still have 176 to go for the last quarter of the year, and we think that's manageable. That's why we have confirmed the guidance of 600.
Wonderful. What is the latest Airbus dispute with Qatar, and will this be resolved in time for the Dubai Air Show?
First, I'd like to say I'm very happy to see the Dubai Air Show coming soon after a long period of time without air shows. And when it comes to specific situation with customers and with Qatar, I don't want to comment.
We've also heard, Mr. Faury, that Airbus is back in play for the IAG narrow-body order after the airline signed a letter of intent with Boeing back in 2019. So how hard are you working to snatch that order from Boeing?
We are always marketing our products. We believe we have very strong products, especially in the single aisle. They are very popular. So we are offering our products to the major groups and airlines around the world, including to IAG, and we are, I can confirm, working to make the best offer we can, and then it will be an IAG decision.
Boeing discovered issues with titanium parts from MPS, which is also a supplier to Airbus. Have you seen any problems? Could there be any problems with these parts supplied?
Airbus is not procuring titanium parts from MPS, so we are not subject to the same kind of problems, but we are obviously reviewing the situation with this supplier to make sure there's no issue. At this very moment, I'm not aware of any issue identified, so I think we're pretty much on the right side.
Mr. Faury, can you just give me a general view on inflation and what that means for Airbus going forward? I know it's also European Central Bank Day. Are you affected by inflation at all?
Well, inflation is something that impacts, of course, everyone. So nobody can pretend to be fully protected. Now, I think the question is, what does it mean for us? And on the short term, we think we have a good balance of positive and negative effects of the inflation. So not too much exposed to it on the short term. On the midterm and the long term, well, we have to try to see what it really means and whether we have a spike in inflation that will then get back under control, or if it's a long-term trend. I don't want to speculate at this very moment, just telling you that on the short term, we think we are not too much exposed to it.
Monsieur Guillaume Faury, thank you so much for joining us today. That was the Airbus Chief Executive Officer joining us this morning. Now, coming up, we also talk a little bit more about some of the market reaction. We've had a lot of earnings reports, as well as those inflation figures out of Spain. We have a full roundup of markets and, of course, the flattening yield curve. That's coming up next, and this is Bloomberg. When you look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology and technology companies as partners. So some
not
of our
rivals.
We know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, plenty to talk about in the markets, from earnings to oil and inflation. Much more on that. We're joined by Nanette Hechler-Feiderbe, Chief Investment Officer for Credit Suisse International Wealth Management. Nanette, what a day to speak to you. There's so much going on with the flattening of the yield curve and repricing inflation expectations. What do you think will move a lot of asset prices away from inflation in the next couple of weeks?
Well, I think it is all about how much earnings that we are seeing now in the midst of the earnings season are going to buffer the increase of interest rates. This is all about how much companies have pricing power and how much they're able to weather through a period where rising yields actually cap multiples or perhaps even lead to some derating. So that's the big theme on markets in my view.
So, Nanette, overall, what are you doing with yields right now? There was a flattening of the yield curve that was really quite extraordinary in the last 24 hours. Is the bond market right about what central banks will do?
I think this flattening of the yield curve is so typical of the next phase. I mean, markets in general have steep yield curves as they are still far away from tapering and first interest rate increases. And then as we come closer to the moment, and this is what everybody woke up this week with the Bank of Canada, as we come closer to these moments where there is a change in monetary policy, then curves are starting to flatten. For me, on the fixed income side, what is likely to happen now is really the rise of real interest rates. This is what is coming along when central banks are coming closer to the moment where they're changing their monetary policy guidance, becoming a bit more hawkish. And in that context, rising real yields are really important for a number of sectors. They're determining, for example, precious metals. They are determining also for interest rate sensitive sectors like real estate and so forth.
Nanette, thank you so much. Nanette Hechler-Feiderbe, Chief Investment Officer for Credit Suisse International Wealth Management, stays with us. We'll talk a lot more about the ECB. We'll talk about margins and earnings. Now, coming up, plenty more on the markets with Nanette Hechler-Feiderbe. This is Bloomberg.
The past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
ready to pay more and pay out more in terms of bonuses too for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, you know, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's get back to the markets and Annette Heschler-Feiderb, Chief Investment Officer for Credit Suisse International Wealth Management. He's still with us, Annette. Thank you so much for sticking around. We're talking a little bit about the flatter yield curve and some of the repricing that we saw in bonds and how you interpreted that. What exactly are you expecting from the ECB today?
I think the ECB is probably going to strike a dovish tone because markets have started doing the job instead of it, and perhaps earlier than what it expected, with this flattening yield curve and short-term interest rates being pushed up by expectations. So a dovish tone, which I expect from Chairwoman Lagarde, and otherwise a confirmation of what the ECB has already guided in terms of the pandemic related purchases that are probably likely to end sometime in March of next year, but still asset purchases under the normal program continuing until well into 2022.
Yeah. And then where do you see the most value in the markets right now? I know we mentioned a little bit about you know your focus on margins when it comes to earnings. Is there an unloved part of the equity market that would be a good time to invest in right now?
I mean, in terms of the sectors that we are really quite excited about at the moment is those that are offering some protection against both inflation surprises on the one hand, but also those that are benefiting from yield increases. And in terms of unloved sectors, although they have been performing quite well since the beginning of the year, I think we can still mention the financials. They are directly benefiting from any yield increases here, and results have been also quite compelling, showing that this is also a cyclical sector, by the way. Next to that, materials are as well a typical inflation hedge. They are certainly still benefiting from strong earnings momentum as we have seen so far as well. And then as far as cyclicals are concerned, I mean, we talked a little bit about autos in the show before. This is one of the cyclical parts of the market that has so far been held back by the supply shortages, but is likely to see over the next few months probably still a lot of the increased demand translating also finally in more supply and therefore good earnings.
Now, I know, you know, for the last couple of times that we've spoken to you, you always told me that the latest pullback was a good reason to buy the dip. What needs to happen for that to change?
Well, we have indeed in the middle of October, when we were still at the lows from this pullback that we saw in September, when sentiment was a little bit more negative, we seized that to step back into the markets, and it was for us a buying opportunity. In the meantime, there has already been once again a market that rallies quite fast, and so we continue to look and stick to our newly built equity overweight by focusing on where we see structural drivers, Francine, for not only earnings trends, but also really for very good new developments. One of these sectors that we're really excited about has to do with the food revolution that we are anticipating. The global food system, if you think about it for a minute, is responsible for a quarter of global greenhouse gas emissions. And so it is exactly in the area where also incentives are being put to rethink the food system. This is opening up business opportunities, but also investment opportunities, and is an excellent example of where we see structural growth going forward.
Nanette, how much do you still worry about some of the situation in China? I know in the past you've pointed to the real estate sector, maybe some of the developers, including Evergrande. Are you worried that this could get worse from now, or has it plateaued?
I think what we have seen most recently, with also coupon payments that have been made in the very last minute, is exactly the reflection of our anticipation of a orderly restructuring. And orderly means that the market can better anticipate as well. As far as China equities are concerned, I think that we still have to be selective.
Thank you so much. I'm sorry we have to leave it there. Nanette Hechler-Feiderb.
Han profundizado el extractivismo en Argentina con más agronegocio, con más transgénicos, con más agrotóxicos, con más proyectos megamineros. Y ahora, como si fuese poco, han avanzado presentando un proyecto de ley que es la ley de hidrocarburos.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Flattening the curve, long-dated U.S. yields slide as traders question how well the U.S. will handle higher rates. Today, the ECB is likely to reassure markets the price rises are transitory. That's as Spanish inflation hits a 29-year high. Airbus ups its profit target for the year. The chief executive, Guillaume Faury, told us earlier he's confident air travel will recover, which supports the jet maker's plans to ramp up output. And Shell misses third quarter estimates as activist investor Dan Loeb pushes to break up the company. It sets a more ambitious emissions reduction target but leaves out Scope 3. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to Frankfurt. ECB officials, led by President Christine Lagarde, gather in Frankfurt for their latest monetary policy decision today. While investors aren't expecting any policy changes, the focus is on the central bank's language around inflation as price pressures run hot in Europe. Now, for more, we go straight to our reporter, Maria Tadeo, outside the ECB in Frankfurt. Maria, I have to say, even if there's no policy action, there's a repricing in the markets which would put more pressure on the ECB.
Yes, Francine, a big rate repricing this morning. Of course, a lot of this is coming off the back of the Spanish inflation print. We did see inflation CPI on a headline basis, including a 29-year high, and also the core inflation. That is the one that really caught my eye, also jumping for the fourth consecutive month. So it's not just a headline that includes the energy, but it's also the timeline of this thing. It's been jumping now for 4 months on a core basis. Again, some could argue that this shows that the type of inflation that we're seeing perhaps is not just a blip or one-off, but it's building and extending in time. And today, that will be the mission for Christine Lagarde, to really manage expectations in the market, to not perhaps avoid a big repricing that could damage the European economy, but she's also have to deal with data that essentially comes in pretty much day in and day out, suggesting that it's not very clear that inflation, as she's highlighted until now, is just temporary soaring, but then will cool. So we are expecting a governing council meeting that will focus almost entirely on inflation, or perhaps to see a heated debate now between whether or not the assessment still stands valid.
Maria, thank you so much. Maria Tadeo there with the very latest, of course, on the ECB. Now let's get to a conversation on alternative investing with Tikehau Capital. Founded by Mathieu Chabron and Antoine Flammarion in 2004, it now has built up more than 30 billion euros of assets under management. It focuses on private debt, equity, real assets, and capital markets, and reports suggest it could be close to listing the first SPAC in Singapore. So, how are alternative investments performing in a world roiled by supply chain problems and impending rate increases? Well, I'm pleased to welcome to the program Mathieu Chabron. He's Tikehau co-founder and chief investment officer. Mathieu, as always, thank you so much for coming on Bloomberg. First of all, give me a sense of how worried you are about inflationary pressures, about supply chains, and what does that mean for actually your business and your ability to target companies?
Well, good morning, Francine, and thanks for having us. Listen, inflationary pressure. There's been a lot of talks over the past few months, rightly so, both sides of the pond. We just heard earlier on your program, some worried maybe around that. I mean, clearly, these very accommodating monetary policy has been putting some pressure across markets, asset price inflation, and that is leading to some, to some social tension. At some point, look at the real estate market. I mean, could it be more inequality than where it is today in terms of the accessibility to the real estate? So, as much as we have the central banks, both the Fed, the ECB here, watching that, I think that there is also some social component that need to factor in, because by addressing very aggressively through monetary policy, the crisis that we went through last year, we should also make sure that you're not creating some social imbalance that could, in the second steps, move on to the political side. So that's for general comment. Now, in terms of asset allocation, I mean, you can always address these inflationary trends by rebalancing portfolios. And if we focus on the private market, that, as you know, and reminded, we focus on a ticker, we see great opportunity. We see great opportunity on the private credit. We only do variable financing. If interest rates were to move, you have your fixed income portfolio. You capture the risk premium, and yet you do not really face the issue with the underlying interest rates. Real estate, long-term commercial real estate. Yes, Francine.
Yeah, and I want to get to real estate in a second, but if you look at possibly, the repricing, what we're seeing in terms of the flattening yield curve and the repricing of monetary policy in the market, does higher interest rates actually change the appetite for investors to invest in companies like Tikehau Capital, or does that remain unchanged?
Well, I actually think that it creates an opportunity for them, because coming back to my earlier comment about the private asset and the private market, you can mitigate through the product that we are manufacturing, because effectively what we do as financial services, every product we do is bespoke, and we can give investors access to that. That's something that they're really looking for, to access this private market. And we, if you want, we can act as a factory for them to access those markets.
What do you make overall of the trend that financial sponsors go public? And will this trend continue?
Oh, if you're referring about the asset managers going public?
Yeah, but also private equity firms going public.
Yeah, no, exactly. No, that's a very interesting trend, particularly in Europe. I mean, we've seen over the past few months, since September, a number of European GP general partners, asset managers going public, and I think it's a very strong structural trend that we are seeing, which is mimicking to a certain extent what has been happening in the US, because the asset class is moving from being a transactional to an institutional play for many investors. And going public, as you very well know, is raising the profile of your firm, is raising the profile of your brand, and I'm expecting more to come, actually.
And more to come in what part of the world? Is there a part of the world actually where this will be more prominent? Is it Europe, or is this across the world?
I think it's across the world. I mean, you've seen some consolidation going on, in the private equity, in the private market space. We just mentioned the listing of some of them, and scale is of essence nowadays. And as much as these strategies have been led by individuals, entrepreneurs, we're now getting to a time where both the consolidation and the listing are an option. It's an alternative to grow. It gives you access to permanent capital. It gives you access to sound resources, and that's important. Like any other entrepreneurs, in the financial services, you need a strong equity base to grow, and that's what the public market is offering.
Mathieu, I know there's also talk about you listing a SPAC in Singapore. Can you confirm that?
Well, we cannot really comment. I mean, there's been obviously some strong initiative by the MAS in Singapore, by the SGX, the stock exchange, to facilitate and open the market, like the LSE, did a few months ago. I mean, as you know and commented, we listed one on Euronext Amsterdam a few months ago, and so we're always trying, to be at the forefront of financial innovation, and effectively the SGX, the MAS, was to open, the market. Certainly, TKO will try to take advantage of that.
Mathieu, thanks so much. Mathieu Chabran, our co-founder of TKO Capital, stays with us because I want to talk about real estate. I also want to talk about climate change. Coming up just days before the start of COP26 in Glasgow, and the president of the Asia Infrastructure Bank pledges further climate financing. So we'll talk climate change with Mathieu Chabran next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Between 2019 and 2030, our total accumulated financing for climate change would go up to $50 billion. At this stage, we already have financing for climate account for 41%. By 2025, it would go up to 50%.
Asian Infrastructure Investment Bank President Jin Lee-kun there on the bank's climate financing pledge there just days ahead of COP26 in Glasgow. So let's stick with the conversation on green investments and get back to Mathieu Chabron. He's co-founder of Tikehau Capital. In a statement this week, the firm also said it's aiming to reach 5 billion euros of climate-dedicated assets by 2025. It's attracted 1.5 billion euros of such funds so far. Mathieu, where exactly do you see the best money being deployed in this transition? Should we look at the transition as something that's linear, or that something that will be stopping and starting?
If you allow me, Francine, maybe I will step back just 1 second. 5 years ago, COP21, Paris Agreement, great objectives had been set, reducing CO2 emission, in order to maintain the 1.5% global warming. And yet, 5 years later, actually it has increased. Now, people, we cannot point finger to anyone, but it's about, how we move forward. And asset management, the asset owner, the asset allocator have a huge role to play. Francine, not to snow you under numbers, it's 4 trillion per year to be deployed between now and 2030. It's 3% of the global saving to be rolled out. And so asset managers, asset allocators have a real responsibility here.
But Mathieu, on that, there was, for example, a label of ESG. First of all, it's very difficult to define. If you look at some of the firms, they define it differently. And the Commission also went as far as repricing or taking the label off a big chunk of some of these ESG assets. So first of all, what's your definition? And until we have a common language, how difficult is it to know as an investor where exactly you're putting your money in?
Well, first of all, whenever you're talking about impact, you have to be able to measure. And, if you focus on you say ESG, so let's start with the E, right? With the climate, because there are many things in the S and the G, obviously. If you start with the climate, it's how much the investment you're making, not to stop emission, but to compensate. I'll give you a quick example. We do mid-market private equity. We invest across European mid-market companies who are, innovating, who are, doing building energy efficiencies. And by investing 600 million euros over the past 9 months, we have actually mitigated 3 million tons of CO2 emission. And I think this is where it's very important, because sometimes the passive asset management part of our industry, it's very difficult to say you're doing ESG. When you're doing private market, when you're investing into companies, when you are lending to companies by taking a very responsible approach, where you are you're reducing the margin, the margin by some margin ratchet. Here you're doing, real investment into the economy.
Mathieu, I also wanted to get back actually to real estate, because we just started talking about it, and then I rudely interrupted you. That's what we do on Thursdays. Where do you see the best value when it comes to real estate? And I know you're also committed to London.
Yeah, no, that's true. We announced this morning an acquisition on Pall Mall, so you can hardly do more premium, in London. Until recently, we were doing more, secondary areas where we were repositioning, reconverting on some industrial warehouses. And here, we're taking some on commercial real estate, long-term commercial real estate, not only as an inflation hedge, coming back to your inflation comment earlier on, Francine, but also when it comes to London, to a strong commitment to London as, a financial place, at the financial place for the long term. And that's one thing at TKO that we've been very active in, commercial real estate, but also residential. We invested in Portugal, 3 months ago, 3,000 residential units. And we really believe that, once again, these private market opportunities, you can find great opportunity to deploy, to allocate, whilst you can be more concerned about the public market, the valuation, and the pure interest rates movement.
And Mathieu, finally, I mean, given everything that's happening with, the flattening yield curve, what's your take on high yield credit markets? I know that's something that a specific space actually that TKO is looking at.
Yeah, high yield, it's all about credit risk. Obviously, right now you've seen a very strong compression, in the tightening of the spread over the past few years on the back of the monetary policy. I believe that high yield, should not be approached as, an overall asset class, but it should be about asset picking. And that's where, on this type of asset class, in this type of the bond universe, it has to be a deal by deal. I mean, you need to have really strong underwriting, risk monitoring position. Like for me, if I sketch a bit, Francine, high yield is not about ETF. High yield is about real, active asset selection and proper, credit risk underwriting.
All right, Mathieu Chabon, thank you so much for your time. As always, he's co-founder there of TKO Capital. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russian President Vladimir Putin has told Gazprom to start refilling its European gas storage facilities in a move he says will ease pressure on the region's energy market. Putin ordered the state-controlled giant to start the process on November the 8th, when domestic storage sites will be full. European gas inventories are at the lowest seasonal level in almost a decade. Now, the UK is hit back at France over its proposed retaliatory measures in a dispute over post-Brexit fishing rights, calling them disproportionate. France says it may disrupt the flow of trade with Britain unless more of its boats are given permits to fish in UK waters. The UK maintains it's granted 98% of licence applications from EU vessels since Brexit. Now, Lloyd's has posted a better than expected pre-tax profit in the third quarter and lifted its outlook as it benefits from the rebounding UK economy. Profit at Britain's biggest mortgage lender almost doubled to £2 billion ahead of analyst expectations for £1.4 billion. And that's your Bloomberg First Word News. I'm Leanne Gerrans. This is Bloomberg.
Leanne, thank you so much. Now, VW is sticking to its margin forecast, even as chip supply strains take a toll on third quarter production and profits. Europe's biggest car maker has cut its forecast for annual deliveries and sees sales in line with a year ago. Our colleague, Matt Miller, spoke with the VW chief executive, Herbert Diess, this morning.
Quarter three really was difficult for us. It drove our volume brands into the red numbers. Premium remained quite resilient. Now Porsche, Audi doing quite well, but the volume brands really suffered a lot. We're also prioritizing semiconductors towards higher margins. So all in all, I think we are happy with the results. And I'm sure that we have seen the worst. So Q4 should be much better now. We should be through the worst, and then we should see an increase of semiconductor supply basically quarter after quarter. This is how we see the supply chain recovery. There will be remaining constraints for even for next year, but I hope that month over month we will show a better resilience of the supply chain. So we're working hard for that. We have big teams, direct contact with the semiconductor manufacturers, with the foundries, and so our teams are working really hard to get more, and we should see some innovation. But there are also some positives. Now we had very good, very strong EV sales. We could double EVs sales over last year. So also some positive signs from out of quarter three.
Sure. You had talked about the possibility of making your own semiconductors. Is that still a topic of discussion at Volkswagen?
That for sure, but that takes time. Now we have to build up the resources as the semiconductor landscape in the car really is consolidating. Now we're coming to higher, more performance compute units in the car. It makes sense, it could make sense in one or the other area to do your own semiconductor design. We are working on that. This is our way forward, not for all the semiconductors. Semiconductor content in the cars is growing significantly, about 7 to 8% year after year. So there's a lot of silicon going into the car in the future. Some of it will be made by our own entities.
Well, that was the VW Chief Executive Herbert Diess speaking to our Matt Miller. Now, coming up, Shell's big miss. The oil supermajor reports adjusted profit for the third quarter, missing estimates. That's a day after a big activist hedge fund goes on the attack. More on that story next. This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But what that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I want to be, I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at you'd have to look at what was you're defining as strategic or critical.
Monday on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, a lot going on in the markets. First of all, it's a very earnings-rich day. I mean, I think we have about 20 to 22 companies reporting between Europe and the U.S. European stocks pretty much steady. If you look at U.S. indices, also edging a little bit higher. Investors, again, weighing some of the earnings report to assess the strength of the economic recovery. However, it's really all happening in the treasuries. If you look at short-term treasury yields, are rising faster than the longer-term ones. The 10-year treasury actually pretty much flat. The 2-year yield added some 5 basis points. Now, this has more to do with what's happening in inflation. Again, investors are looking to the European Central Bank a little bit later today for reassurance that these surging prices are just transitory and not about to spiral out of control. Meanwhile, natural gas and power prices in Europe falling a touch after Russia also signal it may increase shipments of gas. Some of the companies that we're looking out for, again, Royal Dutch Shell sliding more than 4% after missing analysts' profit estimates. The picture there is, of course, with Daniel Loeb trying to say that they need to break up Shell. Moments ago, the management at Shell actually defending the company structure. All right, let's take a broader picture and look at the map in Europe to see exactly what's moving and some of the pressure points that we're seeing. Our Maria today was on the ground in Frankfurt for us. The focus firmly on some of the inflation update, especially from Madrid. Global stocks still near all-time peaks, supported by some of these robust corporate earnings seasons so far. You can see the CAC 40 actually a touch higher if you look at the DAX, but also the FTSE here in the UK a little bit under pressure. The risk sentiment could weaken and investors lose confidence in the ability of policymakers to contain this inflation, which is why all eyes should really be on the ECB and what Christine Lagarde has to say a little bit later today. Again, in addition to the ECB policy meeting, investors are awaiting a report a little bit later on U.S. economic growth. So also, don't forget about that. It could likely show a cooling recovery as well as weekly jobs data. Well, Bloomberg Surveillance Early Edition continues in the next hour. Anna Edwards will be in London, Matt Miller will be in Berlin, and Kaylee Lyons will be in New York. They have a full roundup of the market moves, and of course, we'll also get to our Will Kennedy. Not only will he focus on everything that's happening with Shell, but also EU gas and power. This is one of our top stories today, and we need to spend a bit of time on it. There are more signals coming from Russian President Vladimir Putin that he will send extra gas to the continent next month. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look great.
the bow tie. Drop the bow tie.
What?
What, skinny tie?
Oh, yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really? Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
We think markets are going to become more challenged going forward.
The biggest constraint we're going to face out there is shortages and price hikes.
Supply can't keep up, and the release valve, if you will, is going to be higher wages, higher inflation. And what we're seeing in earnings season is that so far most companies can pass that on.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, October 28th. Our top stories today. Revolt of the bond market. Central banks are being tested as fears of inflation surge. We'll hear more today on rising prices from the ECB. Car makers overcome some bumps in the road. Ford raises its full-year forecast and restores its dividend. Volkswagen maintains its margin outlook despite problems caused by the chip shortage. And Joe Biden heads to Capitol Hill. He's pushing House Democrats to reach a deal on his big social spending plan. A very good morning, everybody. Welcome to Bloomberg Surveillance, the early edition. Kaylee, European equity markets bogged down a little bit with the heavyweights of autos and energy moving to the downside. It's difficult to make headway. What do you see in these markets?
Yeah, that was definitely the case in Asia overnight, Anna. Broadly, it was a down day for stocks. It was also a down day for commodities and a really steep down day for bonds, especially in Australia and New Zealand. Multiple standard deviations in moves for the bond market there. I'll have you more on that in just a second. But as for what happened in the equity session, you both had Hong Kong and Chinese stocks down, and one of the big individual underperformers was CASA. Of course, that is a property developer. It has received 2 downgrades because of doubts over its ability to make dollar bond payments. This is a story we have heard before in the Chinese property sector. That stock, as a result, down 18.5% overnight. Now, as for those moves in the bond market, Australian 3-year yields are up 40 basis points since just last Friday. Today, that yield moving up 19 basis points. We're now at 112. And the Australian Central Bank has not stepped in to defend its yield target. The question is, will they have to do it as the bond market vigilantes look like they are indeed back? Now, of course, the flattening of yield curves we're seeing globally, really about growth fear, and you're seeing that show up in commodities. Iron ore futures down more than 5% in Singapore. And finally, just a little bit of a haven bid for the Japanese yen overnight, stronger against the dollar by about 0.2%. Now here in the U.S., earnings week is not over. We're waiting for more mega cap results after the bell tonight from Apple and Amazon. Ahead of that, S&P 500 futures are up about 0.2% after a few tenths of a percent losses in yesterday's session. In the bond market, it's not so much about the yield on the 10-year this morning. It is instead about the flatter curve. We are seeing the curve at the flattest since all the way back in March of 2020 for the 5/30 spread. You're seeing oil coming in for a second day, though off of its lows at 82.24. And then checking out Bitcoin, of course, had a big down day yesterday, Matt. This morning, though, up about 3%. Right now, it's trading just under $61,000.
All right, I have a GMM screen as well, Kaylee. You had 2 black boxes in your, I believe it was in your sovereign bonds column. We have the same picture here in Europe, especially at the short end, at the front end of the curve. We're seeing some big moves here in Spain and Sweden, but we're also seeing big moves in natural gas, down almost 10%. So the volatility continues in the energy sector. We're watching that very closely. Nonetheless, Euro area economic confidence came in ahead of expectations. In fact, it was at a reading of 118.6. We were looking for 116.7. So maybe some good news on a little bit of a down day, kind of a mixed day for stocks. Take a look at the Stock 600 index right now as we see some of the benchmarks up, some of the benchmarks down, little change on the broader European benchmark, but we have a lot of individual earnings stories as well as an activist shareholder story. I'll start with Anheuser-Busch. You can see the gains here, more than 7%, and it's the biggest leader on the Stock 600. I have to chuckle a little bit from my seat here in Germany as they talk about their premium brands as being Budweiser, Stella, and Corona. These are 3 beers that I would not touch unless I were in the U.S. and had no other choice. You see Rolla Shell there. We have been talking all morning about the activist investor story, trying to look for a breakup, look for a change in the business at Shell, and that's, as a result, hurt the shares. And then Volkswagen shares are down as well, even though they kept their margins year to date, even though, for the full year, I should say, even though they said they see improvement on the chip supply issues. And Stellantis, by the way, said they also see month-over-month improvements. They had a rough third quarter because they weren't able to produce as many cars as they wanted to. In fact, the CEO told me a little bit earlier, Anna, they have a backlog of about 500,000 cars into the year end.
Yeah, demand not really the problem, is it? Getting hold of those chips to put them in the cars, perhaps more the issue. Matt there with his reflections on the market and the European beer market. Let's talk about what's coming up ahead today on, well, on our radar at least. It's the ECB rate decision, 7:45 New York time, of course. The central bank is likely to start laying the foundations for the big decisions that have to be made in December on asset purchases, but more immediately, they might be trying to reinforce these pushback messages against the bond market, suggesting they won't be rushed by the bond market into action when it comes to interest rates. We'll talk more about that shortly. We'll get earnings from more big tech companies as well, including Amazon and Apple. Also, investors are hoping to get more information about Facebook's metaverse plans. Yes, that word again, metaverse plans. Maybe we can all be together in the metaverse at the company's Connect conference. And we'll get US GDP data for the third quarter at 8:30 New York time. Bloomberg Economics says the data may hint at stagflation. Just a hint, Kaylee.
Stagflation, there's that word again. Forget about transitory. Maybe we're going to ban another word from our vocabulary, and metaverse will become the vocab word of the day. Also today, we are watching Washington because President Biden heads to Capitol Hill to brief House Democrats on his social spending agenda just hours before he heads to Europe for a Group of 20 summit. Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington. So, Jack, talking about that economic spending package, I feel like I've gotten whiplash in the past 24 hours. I thought we had a tax deal, then some people throwing cold water on it. Where do we stand?
They're still working on it. The fact that the president is expected to come to Capitol Hill means, one, it's crunch time and they need to finalize some things, but they're close enough to maybe getting a handshake deal on the basics that it's worth it for him to go. Yesterday, there was significant pushback to this so-called billionaires tax that was supposed to be a critical part of it on unrealized capital gains. It's looking a little better for the conversations on a minimum corporate rate tax, but really they still don't know exactly how much revenue they're going to get, how much they can spend. There was a lot of pushback, and lawmakers are saying that the child care, the paid leave, rather, portion of the bill is probably going to have to come out. So they're juggling a lot of things, and there's still a lot of uncertainty, and maybe a little bit of a pep talk from the president can help them rally.
Okay, so President Biden is going to be meeting Democrats to, as you say, help them rally, to try and rally them around his tax plans. Do we have any sense then yet, Jack, about which of these tax ideas are going to make the final cut? Because there still seem to be a range of things on the agenda.
Yeah, there's a lot of uncertainty there. As I mentioned, it's not looking great for what was the big news just 24 hours ago from Democrats, the unrealized capital gains measure. That got some pushback, not only from some moderates, including Senator Joe Manchin, but the House Ways and Means Chair, Richard Neal. So that does not look to be in good shape for this bill. The 15% minimum corporate tax rate has not gotten that pushback yet, and that could raise a few $100 billion. So that appears to still be a pretty critical part of what they're trying to do.
Jack, thanks so much for joining us. Jack Fitzpatrick there of Bloomberg Government talking to us about the current state of the spending plans. Now, Volkswagen says the supply woes on its chip components are easing with steady improvements expected into next year. The CEO, Herbert Diess, spoke with us earlier this morning.
I'm sure that we have seen the worst. So Q4 should be much better now. We should be through the worst, and then we should see an increase of semiconductor supply basically quarter after quarter.
We heard the same thing from Stellantis today, which is, of course, the combination of Fiat Chrysler and Peugeot Citroën. Let's get more with Bloomberg's global car czar, Craig Trudell. So, Craig, it looks like, at least for European car makers, the chip situation is improving. Nonetheless, investors don't really love the numbers they saw.
Yeah, I think pretty consistent with what we heard from Mary Barra at GM just yesterday. She used remarkably similar language to what Herbert Diess used with you this morning. Just the idea that, sort of the hope and expectation being that, we've been through the worst. And I think it's a matter of, there's sort of nowhere to go but up. The barrel was really empty last quarter. You had a situation where, dealers were selling cars right off the truck as soon as they arrived on the lot. And it's a situation where, we really need to rebuild inventory. A lot of these car makers have unfinished vehicles that are almost built and just waiting on chips to be equipped. So the expectation being that in addition to getting plants back up and running, that they'll have some vehicles that are just waiting on those final bits of semiconductors to be finished and potentially give them a boost toward the year end.
The chip shortage didn't seem to affect Ford in that negative a way. It reported after the bell yesterday, raised its profit outlook. It's resuming its dividend payment. What's going right for Ford that isn't going as right for everybody else?
I think they got hit much harder in the first half of this year by a fire in Japan that hit a major supplier, and they really took it on the chin in the second quarter in particular. So, this is a situation whereas the rest of the industry really felt the sort of, peak in terms of the pinch in the third quarter. While Ford was far from unscathed, it was a matter of, sequentially they were actually able to, get a bit better supply going, and their inventory wasn't quite as dire as what we've seen from some of the other companies. But what we saw consistently with Ford and GM and VW, for that matter, is just a real emphasis on the money makers, right? So with Ford and GM, it's the pickups. With VW, it's the likes of Porsche and Audi sort of benefiting at the expense of, say, the Volkswagen brand. Really, if you only have so many chips to go around, you're going to put them to where your bread is buttered.
Yeah, well, and it's not just about chips. I think the fascinating thing in today's earnings reports, Craig, is that we've seen this across industries because ABI InBev says the same thing about beers. The aluminum price has risen so much that they're making room for their premium brands, and that's how they keep their margins up. Craig Trudell there, our global car czar, talking to us about the slew of earnings that we've had. Now, it's ECB rate decision day. While investors aren't expecting any policy changes, the focus is on the central bank's language around inflation as price pressures run hot in Europe. Carolyn Look, Bloomberg European economy reporter, joins us out of Frankfurt. So, Carolyn, what can we expect from the European Central Bank?
Yeah, I think it's exactly what you said, that today is mostly seen as a stepping stone to the December meeting when the ECB is expected to end to decide about the end about its pandemic program. But I think that doesn't mean that today will be smooth sailing necessarily. I think that President Christine Lagarde will have a very tricky challenge in terms of making clear to markets that the ECB is not the BOE, it's not the Fed, and that inflation dynamics in Europe are really quite different from what we're seeing elsewhere, and that's going to be very tricky because as of this morning, we're seeing markets pricing 20 basis points of rate hikes by the end of next year. So Lagarde is going to want to push back against that.
Yeah, markets have moved to price in rate rises from the ECB earlier than the ECB wants the markets to do that. And that was even the case before today. And Carolyn, you point to the market pricing being moved today. We got inflation numbers of 5.5% out of Spain. That's just one part of the ECB. But is it difficult for Christine Lagarde to argue the ECB is different? It doesn't need to go at the same pace as other central banks when we see inflation prints like that?
Yeah, I mean, I think that's a good point. And, actually, 15 minutes after they publish their announcement today, they're going to see a German inflation print. So that's going to add to that communication challenge. But, when we're looking at what economists expect, for example, they see interest rates on hold through 2023. And so I think before they even think about raising rates, they're going to want to think about ending bond purchases, which, as you know, they don't only have their pandemic program to think about, but also their their older asset purchase tool. So I think, if inflation rates do come down next year as they're expecting, the challenge could look very different next year.
All right, Bloomberg's Carolyn Look in Frankfurt, thank you so much. Christine Lagarde certainly going to face some challenges in her news conference today, trying to talk down the bond market. Let's get back to the stock market, though, and take a look at some stocks moving in pre-market trading here in the U.S. A trio of stocks moving to the downside on earnings this morning. Twilio is one of them, the software company forecasting a wider loss than expected in the fourth quarter, plus its COO is stepping down, and as a result, that stock is down 12% before the bell. eBay also disappointing with its holiday forecast for the current quarter that we are in. Apparently, the pandemic boom for eBay is pretty much over, and it's actually losing active customers. And as a result, that stock is down 5.74% in early hours. And one more mover to the downside is Flex. This is a manufacturing services company. It, too, gave a disappointing forecast, and it, too, is moving lower in early hours, Anna, down about 5.4% before the bell.
Kaylee, you are the bringer of doom this morning, but we thank you anyway. Coming up on the program, bond curves flashing a growth warning. We'll discuss with the head of European economics research at Barclays, and the tech earnings parade continues today. We'll discuss what to expect from Apple and Amazon. Plus, as China-US tensions linger, Taiwan's president makes some comments that are bound to irk Beijing. We'll have more later. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller in Berlin and Kaylee Lines in New York. Let's get back to the market themes. And one of the big themes today is what we're seeing in bond markets. Flattening of the curve. The short end particularly active, particularly interesting. We see spike up in yields on a number of two-year horizons. We've got in here this chart for radio listeners. This is showing New Zealand, Canada, Australia, all of those yields spiking higher just in the last week or so. And Justina Lee from Bloomberg Markets joins us now to take us through this and the implications. Justina, we've got certain central banks where the market seems to be pushing them towards some course of action. How do you think this, with the market pushing these central banks saying, come on, we think you want to hike rates?
Yeah, I mean, that's exactly what the short end rates are showing. I mean, they are rising because people are feeling increasingly sure that we're going to start seeing some rate hike, tightening moves coming from global central banks. And it's really interesting to see what that's doing to the yield curve overall, because the long end is actually falling. So that's a sign that, economic growth conditions for now are strong enough for some tightening moves, but maybe in the longer term, people are getting worried about what that means for growth, especially with all these supply chain bottlenecks.
Yeah, tightening moves make sense. Rate hikes, I'm not so sure from the ECB or the Fed yet, and especially if we see a disappointment in Chinese growth. I mean, how can big central banks hike into that kind of global economic scenario?
Right, exactly. I mean, that's the dilemma we're seeing for the ECB today, right now, because obviously we have seen inflationary pressures in Europe rise like everyone else. But the question is sort of, is this transitory, as the Fed keeps telling us? Because we're still seeing, rises in consumer prices. Obviously, some of that is because of energy, some of that is because of supply chain woes. But the question is, I mean, is there so much pressure that central banks will be forced to act? And I think that's what all traders are watching right now.
And as for how this translates into risk assets, the move in the bond market hasn't been driven by real yields. It's been driven by break-evens, by higher inflation expectations. As long as the move isn't coming from higher real yields, does that mean stocks can still do okay?
Yeah, it's pretty interesting because normally a flattening yield curve is a sign of increasing economic worries, but we're still seeing global stocks near their records, and I think that's another sign that equities are still getting, quite a lot of support from earnings, and maybe people still thinking that equities is the way to go with bond yields still, on a historical basis, quite low.
Yeah, not far from those highs then. Justina, thank you very much. Bloomberg's Justina Lee with the latest on the markets this morning. And for more market analysis, check out MLIV Go. That is the function to use on your Bloomberg. This is Bloomberg.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards in London and Matt Miller in Berlin. Now let's get the first word news. And in Taiwan, President Tsai Ing-wen says that she has faith the U.S. would come to the island's defense if China tries to invade. That's a comment that is bound to irk Beijing. Tsai told CNN that the threat from China is increasing every day and confirmed the presence of U.S. troops in Taiwan. CNN says there are fewer than 36 American service members there. Hong Kong is preparing to roll out coronavirus booster shots. Top on the list are the elderly, those at higher risk of infection, and people who were vaccinated with China's Sinovac biotech shots. That vaccine is seen as less effective than others. Post-Brexit tensions between the UK and France over fishing rights keep rising. The British government hit back at France over its proposed retaliatory measures, calling them disappointing and disproportionate. French authorities say they may disrupt the flow of trade with the UK and energy supplies to the Channel Islands due to a lack of fishing licenses given to French boats. And the combined net worth of Elon Musk and Jeff Bezos is now approaching $500 billion. The rise has been fueled by the unrelenting rally in Tesla shares and a broad surge in tech stocks. The value of the two fortunes is about equal to that of America's biggest bank, JP Morgan Chase. So, Matt, my first question is, what can two people possibly do with $500 billion? And Elon Musk's answer is, I'm going to Mars.
Yeah, they both have plans involving space, and they both like to do a lot on the side. There's a huge difference, I note, in that Jeff Bezos owns a lot of land, and Elon Musk wants to sell everything, even his house. He doesn't want to own any possessions.
And trips to Mars, perhaps selling those as well. I'm not sure I want to go. I think I've said that before. Let's tell you what's coming up on the program. Barclays head of European Economic Research, Sylvia Ardania, will join us. We will preview what we'll hear from the ECB. How much pushback will we hear from the ECB about markets' assumed path of policy tightening? We'll talk about that next. This is Bloomberg.
Опасный участок, ответственный. Рустам поднимает тебя на жумаре. Шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. Своим вот этим поступком хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller in Berlin and Kaylee Lines in New York. And Matt, we've had plenty of really interesting corporate news flow this morning, including the Shell story, which maybe we linger on for a moment, which is really weighing on the share price there, the results from that business, also the new targets they've come through with ahead of COP26 and the activist investor. It's difficult for European equity markets to make headway when you have the energy sector weighed down today by that kind of news flow, plus the Volkswagen story weighing on the auto sector.
Well, yeah, well, and I would point out also that you have a huge drop in gas prices. Now, of course, they've run further and faster than anyone could ever have predicted, but we do have a 10% drop today. That's a literal decimation. And of course, you've got the Dan Loeb third point news on Shell. Now, he does tend to take big stakes and make big demands in big companies on a regular basis. That's his job. The question is, will they be listening to him, and do investors take his moves that seriously? Do they go along for the ride, Anna?
Yeah, I had lots of interesting conversations with Will Kennedy from our energy team about the similarities between this move and the differences between this move and the engine number one move that we saw in the US. Kaylee, what do you see ahead of the market open there?
Well, as you say, Anna, there are a bunch of individual company stories that are quite interesting, but on a headline level, the price action in the equity market is really quite uninspiring this morning on both sides of the Atlantic. Right now, the stock 600 is essentially flat on the day, only up about 1/4 of a point. And here in the US, S&P 500 futures are in positive territory, but they too are only up a little more than 1/10 of 1%. Where the real action has been is in the bond market. We are seeing curves flattening really across the world, giving some signal about growth concerns if central banks do indeed tighten policy, and maybe more so tighten policy quickly due to higher inflation. So we're seeing the 530 spread here in the US continuing to narrow. We're down another 4 points this morning. We're at 75 basis points right now. That is the flattest the curve has been, going all the way back to March of 2020. The question is, how does Christine Lagarde and the ECB navigate that today, especially in the press conference? How hard do they push back on the bond market and the pulling forward of hike expectations for the ECB as well? And ahead of that decision, the euro is weaker against the dollar by about 0.2 of 1%, let's call it. Struggling with my rounding this morning, Matt. We're at 115.84 on euro dollar. Now, as I said, though, there are some more interesting moves within the equity market and pre-market trading here in the U.S. Matt, my gift to you, I'm going to talk about cars and motorcycles. The big outperformer in early hours is Ford, up 9.4% after lifting its profit forecast and reinstating its dividend. It's weathering the chip shortage quite well, or at least it did in the third quarter. That's giving a bit of a lift to Tesla and GM that are higher by 3% and 1.4% respectively. And then Harley-Davidson, the motorcycle maker, reported yesterday it's raising prices to deal with some supply side pressures, and so that stock is up about 1.4% before the bell. Matt, you're welcome.
Thank you very much. I will say I'm really looking forward to, I'm going to move home. I'm coming back actually on Saturday, and I want to buy a Ford truck and a Chevy Corvette and do my best, you know, for the U.S. economy, and maybe as a result help out the sales numbers at those companies if they can deliver me the actual product. Now, if you're looking for inspiration this morning, Kaylee and Anna, look no further than the European Central Bank. We have some exciting happenings today at the Frankfurt headquarters. I wish I was still standing outside in the cold, overcast climate of Frankfurt with my Bavarian hunting cap on. But take a look at this chart. For those of you listening on radio, I welcome you on London DAB Digital Radio. Thank you for joining us. We have the one-year implied policy rate showing an expected hike at the Bank of England and at the Fed in white and yellow, respectively. no such luck for the ECB. Not quite that exciting, but we're still looking forward, as Kayleigh said, to the press conference. Silvia Ardagna joins us right now, Barclays Head of European Economics Research. Silvia, what are we going to hear from Christine Lagarde and co. today that will excite us?
Good morning. We think that Christine Lagarde is likely to repeat that this energy shock is temporary and it's a supply shock to which the ECB is not going to respond. So you mentioned there is not much of a hike in sight in the euro area, in the euro swap curve priced in, but indeed in the past couple of weeks, rates, front-end rates have moved quite a lot. So I think what can excite us is more the forcefulness with which Christine Lagarde will basically push back against this market pricing and whether the communication will be credible enough. In our view, she will repeat that the current market prices is not consistent with the forecast that the ECB has in the medium term, and it is not consistent with the forward guidance that they have just changed in July. Yeah. We have to keep in mind that the ECB is coming off a decade of lowflation and missing its mandate. And so this time around, we think the bias is for them to really remain accommodative long enough to be able to get to the 2% inflation target.
Okay. Silvia, I spoke to one guest earlier on, though, who said the problem with that Christine Lagarde is going to have today is that she doesn't come with any new inflation targets and the inflation, or forecasts rather, and the inflation numbers she's working from, the ones the ECB has already published, are out of date already. And so it's going to be difficult for her to forcefully argue that point about transitory inflation when she doesn't have new numbers. Is that something that's going to be an issue?
Look, inflation forecasts might be revised, but if we focus on the medium term, I would say that the situation is not that much different. Clearly, we have a pretty sharper acceleration of inflation for this year and perhaps some for the beginning of next year. But it's also true that the majority of this acceleration is due to energy prices. And so this is unlikely to give the same boost to price dynamics when we go into the second half of next year. Actually, the base effects will play the other way around. What she can argue that indeed wage negotiations have shown so far no sign of second round effect. And I think it's telling what has happened in Germany in the construction sector, where just 2 weeks ago, workers negotiated wages and they only managed to basically obtain a 3% wage increase for 2022 and 2.2 more or less for 2023. So definitely nothing more, short of what they were asking, 5%. And I would argue a wage increase that does not suggest any evidence of second round effects.
Well, obviously, on the inflation side, we've seen break-evens moving higher as well to reflect those higher expectations. And while we're talking about the bond market, we are seeing a very dramatic flattening of yield curves really across the world. A headline just crossing the Bloomberg terminal that the 530 spread for gilts in the UK narrowed to its flattest since 2008. How do you interpret these signals from the bond market? Are they telling us that policy is actually going to end up too tight down the road and that's going to choke off growth?
Well, part of it might reflect that. Part of it reflects, I think, also demand-supply balances and technical effects that are in the long market, particularly for the UK curve, the LDIs, and have some, strong demand that have generated that. I think in general, a narrative where a premature tightening may choke off growth down the road might be present in markets. And I think also for this reason, it's important that the central banks who are at the different stage of the business cycle, like the ECB, makes clear in a forceful way that we are far away from policy normalization in the euro area.
Okay, we'll look ahead to the ECB then. Thanks very much, Silvia, for bringing us your perspective this morning. Silvia Ardagna, Barclays Head of European Economics Research. Coming up on the programme, Apple and Amazon are the latest tech companies to report earnings. More on what we should expect from them. This is Bloomberg.
difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards in London and Matt Miller in Berlin. Well, the big week of tech earnings continues today with Apple and Amazon reporting after the bell. Investors will be looking for clues on how both companies are navigating supply chain issues. Alex Webb, Bloomberg opinion columnist, joins us now for what to expect. So, Alex, for Apple specifically, obviously the iPhone 13 has come out. It's kind of hard to get your hands on those given some of those supply chain challenges. Is that going to weigh on this quarter?
That's certainly what people are going to be looking out for. I think most important is going to be what the guidance looks like for the Christmas quarter. We've obviously had some good reporting from our colleagues in Taiwan, Debbie Wu, who, hearing from the supply chain that Apple's not expecting to be able to produce as many iPhones as it had anticipated. Whether that carries through to demand, i.e. can they meet all the demand that they need to? That's going to be the key question that analysts and investors are looking out for.
I ordered mine in September. They're telling me now I can get it in November. But honestly, what else am I going to do? I mean, there's not really very many other choices, Alex, as I'm trapped in the Apple ecosystem. I guess it's not like people are going to cancel and go buy something else, right?
Exactly. I mean, Apple has got its claws into its users pretty deeply with, its bevy of services, whether that's just the fact that you have a bunch of apps in your iPhone, whether it's your photos, your music collection. Each of those service offerings makes it harder to change your iPhone for an Android. So the fact is that I think probably the demand is going to be there, whether it happens in this quarter or in the next quarter or subsequent quarters. It is a different issue. I think that, therefore the scope of whether Apple sees its ability to meet demand, that is really what people are going to be looking out for, as I said.
Yeah, I suppose if you're locked into the ecosystem, Alex, the choice is maybe the upgrade or not upgrade decision rather than going somewhere else. Let me ask you about supply chain issues for another business, though, and that is Amazon. Is that going to be the lead story, or are we all going to be talking about cloud and web services?
Well, the story this week, certainly it's been interesting because Microsoft and Google are, of course, the big competitors in the cloud. Google didn't do as brilliantly in the cloud. Microsoft did. And so the question is whether Amazon is therefore losing share to Microsoft. For all of Amazon's e-commerce offerings, the profit is largely driven by AWS, web services, that cloud business. And so whether Amazon is more like Google or more like Microsoft is, I think, going to be the interesting point. Clearly, there are some constraints, not just on supply, but also the ability to get enough deliverers, for instance, for your Amazon purchases. And so their comments on that will be interesting, but ultimately from an earnings perspective, I think that the cloud numbers are going to be the most significant.
That's the most significant. What about the bread and butter, though, or the old bread and butter of Amazon, the e-commerce side of things, Alex? I was looking at some corporate commentary, I think it was Puma yesterday, in the athletic leisure wear sector, saying, buy now for the holiday season, buy now for Christmas, because, things are busy, supply chains are tricky. What kind of messaging do you think we'll get from Amazon around e-commerce?
There is a sort of a strange dichotomy here that actually some of the comments around the tightness heading into Christmas and the suggestion that you need to order now in order to get your Christmas presents, that actually might increase demand, that actually a lot of people are going to start ordering things early, and if they therefore manage to flatten out the way the demand happens rather than just peaking around the middle of December, then it could look quite rosy. Clearly, the comments on that are going to be interesting, whether the supply chain issues are significant enough to affect fundamentally everything, or if it's really just in high-end products like electronics.
Alex Webb of Bloomberg Opinion talking to us about tech. Thank you very much. I always like to share this interesting tidbit about Puma. First of all, I love the way you say Puma, Anna, but you know who founded Puma?
Brother of?
The brother of Adi Dassler, the founder of Adidas. I didn't think everyone knows that. I know you know.
I know that. I just thought I'd let you do the punchline. Well done, Matt Miller. Thanks for the observations on my pronunciation. I get that a lot this hour. Coming up later today, the CEO of eBay talks about the company's third quarter results. That's at 2:30 p.m. in New York, 7:30 p.m. in London. This is Bloomberg.
His top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Anna Edwards in London and Kaylee Lyons in New York. Now, Volkswagen is sticking to its margin forecast for the full year, even as chip supply strains take a toll on production in the third quarter and profit falls. Europe's biggest car maker has cut its forecast for annual deliveries and sees sales in line now with the year ago. I spoke with the CEO, Herbert Diess, this morning.
Q3 really was difficult for us. It drove our volume brands into the red numbers. Premium remained quite resilient. Now Porsche, Audi doing quite well, but the volume brands really suffered a lot. We're also prioritizing semiconductors towards higher margins. So all in all, I think we are happy with the results. And I'm sure that we have seen the worst. So Q4 should be much better now. We should be through the worst, and then we should see an increase of semiconductor supply basically quarter after quarter. This is how we see the supply chain recovery. There will be remaining constraints for even for next year, but I hope that month over month we will show a better resilience of the supply chain. So we're working hard for that. We have big teams, direct contact with the semiconductor manufacturers, with the foundries, so our teams are working really hard to get more, and we should see some innovation. But there are also some positives. Now we had very strong EV sales. We could double EVs sales over last year. So also some positive signs from out of Q3.
Sure. You had talked about the possibility of making your own semiconductors. Is that still a topic of discussion at Volkswagen?
That for sure, but that takes time. Now we have to build up the resources as the semiconductor landscape in the car really is consolidating. Now we're coming to higher, more performance compute units in the car. It makes sense, it could make sense in one or the other area to do your own semiconductor design. We are working on that. This is our way forward, not for all the semiconductors. Semiconductor content in the cars is growing significantly, about 7 to 8% year after year. So there's a lot of silicon going into the car in the future. Some of it will be made by our own entities.
Are you seeing other supply chain issues? You know, beyond semiconductors, are you having trouble getting hold of any other components for cars, or are you seeing substantial price increases?
We see price increases in commodities, in precious metals, and steel. We even see some constraints in some of the areas, but so far this is manageable. Determining really or crucial is semiconductor supply, and will remain semiconductor supply.
Are you able to pass on those price increases? I know, you know, dealers, certainly in the U.S., are charging far above MSRP when they can. Are you able, as a manufacturer, to start raising prices?
We see some movement in our used car business. Now used car prices are quite stable, even coming up as the demand is stronger than the supply. We also see some possibility to reduce our sales incentives, though this is a worldwide trend. And this also is, you can see in our numbers now, as we see sales numbers basically on the level of last year, we have a much higher revenue. So we can improve the quality of our sales, yes.
That was the Volkswagen CEO, Herbert Diess, speaking there, of course, to Matt a little bit earlier on Bloomberg. And let's segue from a shortage of chips, cars more expensive, pushing up inflation. Tom Keene is here, co-anchor of Bloomberg Surveillance, of course, and no doubt has thoughts on inflation and expectations. And what we're seeing in bond markets, in particular at the short end, a lot of adjustments around the normalization theme then, Tom.
I love what John Arthur says today. He calls it a hawkish dawn, and it's clearly what we've seen. And I can't emphasize enough the changes in the bond market since about 9 a.m. New York time yesterday with a vengeance in the afternoon. We've really begun to see an adjustment. It's an adjustment Christine Lagarde will have to address today. We'll do it with some great guests here this morning. Ibrahim Rabari will start us out strong with Citigroup. But I'll tell you, Anna, let's look at the real yield, the 10-year real yield. We do this for John Farrow, who's on sabbatical. I have no idea who's doing the real yield today. Maybe Kaylee Lines. But there it is. It's the 10-year yield.
Tomorrow.
Back over any number of years, and down we go again. We haven't breached into new negative big numbers on the inflation-adjusted yield, but Anna, with a vengeance there quickly.
Tom, you know what's crazy is we see a huge jump in the MOVE index, so we see a lot of volatility in fixed income, but you don't see it in the VIX.
Well, you don't see, it's not over in the equity market, and the equity market's its own oddity. We'll feature here Apple and Amazon, obviously, Matt, and we've seen the NASDAQ 100 with a massive draw up almost 9%. So, you know, the equity market in its own way is reacting, first of all, to better revenue momentum, but right now, equities and bonds are pretty discreet.
John Farrow focused on the erudite world of rates, and I'm just looking at dumb stocks. Tom Keene is anchoring Bloomberg Surveillance today. Thank you very much, sir, for joining us. Let's take a look at what else we're watching. It won't surprise anyone to know that I'm watching Ducati for so many reasons. Now, Anna, I got to take a ride this morning on the new Super Sport 950 before work, and I am absolutely in love. Yeah, I mean, this bike is just so elegant and really a revelation, especially for someone who cramps himself up on a Panigale sports bike all the time. I wish they would make it in a slightly bigger size. I'd like to see it in a 1200. I get to ask the CEO of Ducati myself this afternoon on Bloomberg Radio. Claudio Domenicali joins us, and we also get to see their new Multistrada. So at 4 o'clock European time, 10 a.m. in New York, you can see the world premiere of the new Ducati Multistrada, and that's really what I'll be focused on this afternoon.
Okay, you're focused on that. I'm focused on the ECB. Let me sell it to you, Matt. Really interesting the way that Christine Lagarde is going to have to push back against market expectations. Maybe spilling over from other jurisdictions, other geographies. She's going to have to push back against some of that if the Governing Council thinks that the markets have moved too soon here. She doesn't have any new inflation forecast to base that on. And how forceful will that pushback be? I think that could genuinely be quite interesting. And I know this might interest you, Matt, or I think it will. You know, how much unity will there be with Weidmann on his way out at the German Central Bank?
Well, I will definitely be glued to my Bloomberg terminal when we get these at 1:45 and then at 2:30 again. I'm sure Maria Tadeo is going to be reporting from live outside the ECB, so she'll be on Bloomberg Television all day with updates, and anyone who's following the markets will be wise to do so in the euro as well, Anna.
Yeah, more Bloomberg surveillance is, of course, ahead. We'll hear from Katrina Dudley of Franklin Mutual, and Holger Schmieding, Berenberg chief economist, will be weighing in, no doubt, on the ECB. That conversation shortly. This is Bloomberg.
Television and radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. Special coverage on Bloomberg Television and Radio.
has been a huge tailwind is slowly starting to turn into a headwind.
There's a demand shock out there, and we've juiced that demand shock with the last round of stimulus checks.
Equities respond generally positive to inflation until it hits a certain level.
We think markets are going to become more challenged going forward.
Don't miss out on the bigger picture here. As fundamentals are damn good.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene. A special day for global Wall Street. It is a day where the bond market is on the move. Katie Lyons in for Jonathan Ferro. He's on assignment, and it's a really interesting market. We'll get to the equity story in a moment with equities up, NASDAQ up, and that. Lisa Abramowitz, I'm thrilled to speak to you about this 3 standard deviation move in the 2-10 spread, flattening curve, the real yield, almost a jump condition to a new negative statistic. And what absolutely stuns me here, and John Authors nails it, it's a hawkish dawn.
A hawkish dawn for central banks globally. And I look at Canada, actually, setting the tone for the market yesterday, surprisingly ending entirely their quantitative easing purchases, bringing forward the rate hike expectations. Are they a harbinger of what's to come at other central banks, or are they independent? This, to me, is one of the key questions on the precipice of the ECB, on the precipice of next week's Fed meeting.
Lisa, publishing moments ago, George Saravelis at Deutsche Bank, and he says, look, the macro analysis, we'll do it. We'll do the ECB today. Out the window. This is about value at risk. What that means is positioning. How out of whack, how out of kilter, Lisa, is the street?
Yeah, basically he was saying over the last 3 days, we've seen unprecedented volatility in the short-term rates of all of the different developed markets globally. I mean, really, if you look around the world, shocking moves, talking about standard deviations. How much is this a complete inability for Wall Street houses to gauge central bank reaction function at a time of faster inflation and slowing growth and a feeling of we're uncertain as to what is causing this inflationary push, Tom?
We'll do the date in a moment. Kaylee Lyons, Amazon and Apple, the advantage of going after Microsoft. I'm sorry, I love what Jeffrey said. Microsoft, simply incredible. Do you anticipate in your reading an incredible afternoon for Cupertino?
Well, our analysts here at Bloomberg Intelligence say the fact that Microsoft was so strong on the cloud actually may bode well for Amazon, because in terms of the cloud, they kind of have a duopoly in some respects. So that could bode well for Amazon on the supply side. But talking about, as Lisa said, what's causing inflation, supply chain issues could be a problem for both of these companies. Amazon, it's not even just a question of getting materials. It's also a question of labor pressures and having to pay workers more to get deliveries within 2 days. And for Apple, I mean, I don't know if you ordered an iPhone 13, Tom, but there's a good chance that you haven't had it yet, that you haven't gotten your hands on it yet.
No, I don't have it. I'm ordering. This is my reality, folks. Count them. 4 new iPhones.
Yeah,
how many do I have? 0.
It's a crisis.
They're
Crisis in the
right
Keene
now.
household.
Let me do the data right now.
Please.
We're going to get to Lisa's brief. Futures up 8, Dow futures up 27. NASDAQ 100 on a tear, up 8.88% off the bottom. That's a Farrowian draw up is what we call that. The VIX pulls back 16.83. A little bit of tension there. The yield, well, we could go all day on the yield. The 30-year bond from 2 point whatever down to a stunning 1.95%. A lot of dynamics there between the 2-year and the 10-year, call it 29 basis points over the last week to see that movement as well. I'm going to leave it there with Brent crude off $3, $83.44 from the peak. I need to be briefed. Kaylee needs to be briefed. Lisa, please put us out of our morning misery.
I'll put you out of your misery, or perhaps put you in new misery. There is a question of the day in my mind, the question of the week and heading into next week, which is how do central banks globally grapple with much higher inflation, accelerating inflation at a time of slowing growth, not stalling growth, slowing growth. This is the conundrum as we talk about the potential inflationary pushes. Is it demand side? Is it the fact that we all have so much money, or is it supply side? Is it the supply chain disruptions that Kaylee was talking about? At 7:45 a.m., we get that ECB rate decision, and basically you were looking at the inflationary rate rising to the highest level since 2008 in the Eurozone. However, there are stagflationary type of of feelings there in terms of trade, in terms of how much things are costing versus a labor market that still is stalling out in some areas. In the United States, it's a different story. 8:30 a.m., we get U.S. initial jobless claims. The expectations is for a new sub 300,000 print, another new low since the start of the pandemic. This is positive. However, we also get the GDP for the third quarter at the same time. This will be potentially less positive. I want to point to the Atlanta Fed GDP Now forecast.
Good.
To me, this was shocking. The idea that we were looking at the potential for 4% growth that has now come down to 0.2% growth for this Fed tracker of potential GDP. What does that mean? Is this prescient? Is this off? How does this cohere with earnings that continue to come out blockbuster after blockbuster at a time when other gauges show a very different picture? And aftermarket, we get earnings from Apple and Amazon. Just to give you a sense, you don't care. A lot of people do. They're massive in the indexes. It's interesting to see how much they've underperformed, frankly, as we've gone on with this year. It's only been less than 13% returns for Apple, only, I say. Amazon up about 4%. How much of the supply chain disruptions have been priced into Apple, and how much, frankly, have people already looked at the labor disruptions for Amazon? How much has been priced in? What do they see going forward?
Many on the sell side, of course, way out front with price targets that are up, and we'll see, and we'll recalibrate. Look for the close this afternoon on radio and television with that. Right now, and this is really timely, Ibrahim Rabari joins us to say he's head of FX analysis at Citigroup doesn't do justice to a large and holistic global view. Ibrahim, I want to start with a great essay by John Authors of Bloomberg Opinion, where he talks about a hawkish dawn. Are we at a hawkish dawn?
Thank you, Tom. It's great to be with you from London. And I do think that we are, and markets are grappling with what is, I think, accurately described as a bit of a regime change, particularly for the inflation outlook, and that is inducing central banks to look for some optionality in tightening policy, if not now, then in the months to come. So I think we will see the hawkish trend continue across global central banks, but to anticipate the discussion, we think the ECB may be a bit of an exception there.
All right, so let's just go first to Ibrahim, on what you were saying, a regime shift, particularly when it comes to inflation. Does that mean that you see this as being more persistent or persistently transitory than some people are expecting in places like Canada, in the United States, where the central banks are expected to hike more quickly than they say they are?
Yes, so we have a lot of sympathy with the view that the combination of factors, supply constraints, generally still relatively positive demand, but also generally fairly tight labor markets and inflation expectations moving up, that they could turn out to last a little longer at a minimum and possibly much longer than we expected not so long ago. So in that stagflation narrative, we certainly have a lot of sympathy with the inflation side, and we have at least some openness towards the idea that growth is going to come down a little bit lower than many had penciled in.
Well, we know Christine Lagarde and the ECB have stuck with their transitory messaging and that this inflation too shall pass. When you think about the fact that other central banks globally are moving towards tightening, and as you said, the ECB kind of an outlier in that, does that mean that the euro is going to continue to lag?
In a nutshell, yes. So we think that the euro is challenged by the combination of some signs of slowing growth, including in the survey data in Europe, but also ultimately because of sensitivity to global trade and Chinese growth. We do have a very significant shock from rising energy prices for a major energy importer that will hit both in terms of trade and real incomes in the Eurozone as well. And in an environment where yields are going higher, they tend to lag in Europe in general. And we think these three factors together have the potential to push euro-dollar in particular yet further down in the months to come.
Ibrahim, I want you to talk about a philosophy that's been out there for years. And folks, there's a lot of Latin phrases thrown about this, but all you need to know is ex post is basically a tone of after the fact. Ibrahim Rabari, Christine Lagarde today, and frankly, all the others, they've all got to operate after the fact. The Bank of Japan proved you can't get out front, right?
So I do think what makes the situation particularly difficult for the global central banks is, in fact, that it's not just that inflation is going up, but the uncertainty about future outcomes is really much higher than it used to be. And it's really that uncertainty that is driving central banks to try to be a little bit preemptive or proactive. They're not truly preemptive or proactive because, as you said, a lot of the developments have already taken place, but by their own standards, they have to bring forward their options to tighten policy without a commitment, by the way, but at least to have the opportunity. Does that, in the end, have to be followed through with persistent tightening? I would say it's more likely than not, but far from certain at this stage.
Ibrahim, thank you so much. Ibrahim Rabari joining us today from Citigroup. Thrilled to say Greg Peters will join us here. Bill emailed in last night and said, get Peters. And we're thrilled to say Greg Peters of PGIM will be with us here in a bit. Lisa, it is absolutely extraordinary. Let me explain this as simply as I can, Lisa, and give us your view. And the concept I have is a 2-year yield that is up 8 or 9 basis points in a 30-year bond, betting on a slowing economy and disinflation coming lower in yield by a solid 20 basis points at the same time. That's original, isn't it? It's a rare occurrence, I guess I should say.
So bond traders are much more pessimistic than stock traders because the economy is not the market. I think that is frankly the conclusion. The idea the Fed's hand will be forced, as we saw the Bank of Canada's hand seem to be forced. Perhaps the ECB has a different dynamic that they're dealing with, but when they hike rates, they are going to be hiking into the same environment that we left off before the pandemic. The idea of an aging demographic, the idea of more debt, the idea of growth that isn't necessarily going to keep up this acceleration that we had seen immediately post-pandemic, Tom. And I think that's the message. The question is, slowdown is not recession. How do you sort of parse out the difference between the two?
Well, in the slowdown, Kayleigh, we're focusing on the bond market here because that's what global Wall Street wants to do right now. I'm sorry, this earnings season, like last earnings season, is killer.
Yeah, they're killing it, Tom. And it's a question of how these companies have been able to exercise their pricing power and retain margin. Bank of America putting out research yesterday that margins are actually expanding on average in most companies across industries, including for staples, which we thought would be ultra sensitive to inflation. So all of the concern about a potential margin squeeze out there, companies are proving those strategists wrong.
Now it's going to be interesting to see. We are thrilled that Kayleigh Lyons is with us. We're even more thrilled John Farrow is not with us. That's makes it interesting. No, but are we going to miss his expertise on the ECB?
Let's talk about the Dow. We'll talk about the Dow all day.
We'll talk about the Dow all day. We'll do that. Stay with us. Greg Peters coming up here in a moment. This is Bloomberg.
With the First Word News, I'm Laura Wright. President Biden heads to the Capitol today to brief House Democrats on his social spending agenda hours before he heads to Europe. The president wanted to have an agreement when he arrived in Rome for a Group of 20 summit, but House and Senate Democrats can't agree on how to increase taxes to pay for the measure. In Taiwan, President Tsai Ing-wen says she has faith the U.S. would come to the island's defense if China tries to invade. That's a comment that's bound to irk Beijing. Tsai told CNN the threat from China is increasing every day. She also confirmed the presence of U.S. troops in Taiwan. CNN says there are fewer than 36 American service members there. The price of European natural gas and power fell today after signs from President Vladimir Putin that Russia will send more gas to the continent next month. Putin has told Gazprom to start refilling its European gas storage facilities November 8th. Benchmark Dutch gas for next month's delivery dropped as much as 12%. Hong Kong is preparing to roll out a coronavirus booster shot. Tops on the list, the elderly, those at higher risk of infection, and people who are vaccinated with China's Sinovac biotech shots. The Sinovac injections are seen as less effective than other vaccines. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Bloomberg surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look great.
the bow tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
When you look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology, and technology companies as partners. So some
Not
of our
rivals.
You know, we know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Now's the wrong time to raise taxes on anybody, whether it's billionaires or average consumers. The problem with the billionaire tax is, one, it probably won't raise much money, since a lot of this money will be given away to foundations, so it won't be taxed. The other issue is it's probably unconstitutional. And the third issue is it creates very, very bad incentives.
The former Secretary of the Treasury on Riyadh Standard Time with Gamal yesterday. I really thought it was really quite something to listen to Secretary Mnuchin talk about something that 6 hours later seemed to evaporate off the landscape. Lisa Bramwitz, Kaylee Lyons, and Tom King. John Farrow on sabbatical, beginning a sabbatical, I should say. I think it's Lisa. I mean, what do you think, Lisa? Capri?
Yeah, definitely Capri. Two-day Capri trip.
It's not too
He
cold
needs
for
it.
Capri.
You know, you're going to go check out, take a tour of Campari
It's
Factory.
going to work out. He got the Gulfstream. Jack Fitzpatrick has never had the surveillance Gulfstream and joins us now from Washington. Jack, Pager and Sullivan in the Washington Post, I guess, driving forward the conversation. Help me with, and Vallier nailed this yesterday, a revised framework. Deconstruct for us right now this new phrase, a revised framework.
So Democrats are trying to come to an agreement. They want to come to an agreement today, preferably by this morning when the president is supposed to speak to House Democrats on not an actual full bill, but basically a list of what they want to put in the bill, which is the important part. That means settling on exactly what the tax measures are going to be. That would also mean, though, they have to calculate how much revenue that gets them and see what they can fit in here. So the key questions right now are, what exactly are the tax measures they can agree to? It sounds like they're good on the corporate minimum rate, not good on the so-called billionaires tax. After that, they can figure out what's in and what's out on spending, and it does sound like the paid leave provision is out, but it's going to be on the basics and not some final bill that's ready for a vote.
So right now, as the president goes to Rome, we're thrilled Anne-Marie Horton, Maria Tadeo will darken the door of the G20 meetings. Jack, are the whips whipping this morning? I mean, are they actually like counting votes?
Well, there's nothing to whip specifically, but we've been in a months-long process where they're figuring out if there are any objections, because Democrats have said that almost anyone among them can be the Joe Manchin type figure and hold this up if they want to be. It's less a whip count and running things by the key members, including Manchin. Now Senator Sinema has some pivotal views on the tax measures. But also they are running this by and seeing if there are objections. There was opposition by Richard Neal, the House Ways and Means chairman, to the billionaires tax. So they are running essentially this list by everyone, but they're not really to a true whip count just yet because there's no bill.
Okay, check. There's no bill really sums it up, that basically we're talking in theory and talking about theory. Kristen Sinema actually gave a wish list or a list of provisions of tax measures that she'd actually would be comfortable with, and she passed it around and said, if you can satisfy these, then let's talk. What was on there that you think has the greatest sticking power as we get perhaps a draft of a bill?
The key one was this 15% corporate minimum rate. I believe, according to lawmakers, what they're talking about is for corporations with $1 billion or more in profits. That's what they've discussed. She can get on board with that. That's expected to raise a few $100 billion over the course of a decade. She appeared to be okay with this billionaires tax on unrealized capital gains, but that got opposition from elsewhere. And potentially, and this one is a little vaguer because, again, it's not a bill and there hasn't been a real proposal out, some sort of 3% surcharge tax on wealthy earners. It would be different than the raising the highest income tax rate, but adding some beyond a certain threshold of about $1 million. That hasn't really turned into a concrete proposal just yet, though.
All right, Jack, so we've talked about the moderates in the Senate. Can we talk about the progressives in the House? Because they were making a lot of noise, and I feel as though they've gotten a lot quieter, even though the social spending that is really key to their agenda seems like it's going to be whittled down.
Yeah, well, they have had their say on exactly what they want to be in the bill, on the reconciliation bill, on the front end, and really helped shape that. Now that's why this is kind of getting funneled through the lens of the moderates. But progressives have been very vocal on the strategy of how to pass this, because leadership, it seems, would like to pass the Senate-passed infrastructure bill through the House and actually have that become law if they had the votes. But there is opposition from the progressives to do that until they actually have a bill that they can vote on the social tax and spending measures. So they are going to try to hold up the infrastructure measure until there's a real concrete deal on everything else.
Well, good luck with that. Jack Fitzpatrick, thank you so much. This would be kind and eventful Thursday in Washington. We need to get back to the bond market. Yes, we've got Apple, Amazon. We'll talk about that along the road, the surveillance road this morning. But Lisa, I'm sorry. We need to reset on the bond market. Let me give you some data, Lisa, and you go with it. The 2-year yield, 0.55%. The 30-year bond, well under 2%, 1.95%. For those on the teeter-totter, short-term yields up, long-term yields down. Lisa, what does that signal?
It signals slower growth, and frankly, it signals that the economy is heading toward a rough patch that perhaps people are not pricing in, at least in the equity market. And I think that this is the divergence that people are struggling with. Why are people in the bond market so pessimistic? I know you guys ask this to me every day.
Yeah.
And at the same time, people say, well, the economy is not the market. Well, then what's really the true reflection of what's going on the ground,
great.
Tom?
You know, Kaylee, I just don't get it. I'm going to be watching Fox Sports, 12 noon Saturday, Michigan State, best football game in college football in a jillion years. Nobody in that stadium, what, 100,000 people? Nobody's as gloomy as they are watching surveillance.
Yeah, okay. I think Lisa's point about whether or not the bond market and the equity market are sending divergent signals is an interesting one. And it's something that has come up time and again over the course of the pandemic era. Does the bond market know something that the equity market hasn't figured out yet? Or is the equity market solely focused on earnings growth and companies' resilience in the face of supply chain pressures? And yes, maybe even growth that is slowing down. But I would also note a lot of the move in the bond market has come from higher inflation expectations. It's the break-evens. Real yields are still very, very negative. And in an environment where you still have deeply negative real yields, can risk assets still do okay?
For Radio Now, we walk through the real yield equation. Farrow does this every Friday. Look for the real yield. Who's doing the real yield tomorrow?
I think Taylor's doing
it. Taylor Riggs is doing it?
Yeah.
She would know a bond if it hit her over the head. Let's do the math. Nominal yield, Lisa, minus inflation is the real yield, the residual, right?
Yeah, correct.
Which of those three things matters?
Well, right
Nominal,
now.
inflation, or residual?
I mean, it all matters deeply for all those people in the stadium who are going to be feeling pessimistic as they watch this and then optimistic as they go to the field. Listen, I will say this. The bottom line is this. Inflation is rising. Can we continue to maintain growth despite the fact that inflation is going up? So far, earnings say yes, bond markets saying no. And these are the questions that we need to answer.
We're going to have to see. It is interesting, and we'll do more data checks here. I really want to emphasize, for those of you hung up on equities, the bond market today, absolutely fascinating. Futures up 8. Dow futures, good morning, Mr. Farrow. Dow futures up 24. Stay with us. This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But what that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. Do
you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.